Good morning, everyone, and welcome to Investor Expo Show for February 27th. My name is Anna, and I'll be your host today. This session will be recorded and sent to your email. Today, we are having a dream team on our show. 5 amazing speakers: Michael Valtos, TJ Watkins, Norman Hallett, Joshua Martinez, and Dr. Barry Burns. I would like to begin and bring to the show our first speaker, Michael Valtos.
So hey everybody, it's my name is Mike Valtos from orderflows.com, and today I'm going to be talking about order flow strategies that will improve your trading. And I'm going to be sharing with you guys some simple ways to use order flow to recognize when the market is starting to make a move, so you get in on the move as soon as possible. Remember, everyone always says the trend is your friend, so you want to get in on the trend as early as you can. And more importantly, I want to show you how to use order flow to keep you on the right side of the market. Lately, this markets have been going berserk and a lot of movements up and down. Obviously the big overall trend is down, but it often pauses for a while, and traders have been finding themselves getting chopped up in that sideways activity. And by the time this presentation is over, if you're new to order flow and you want to learn more, I'm going to show you how to get a copy of my book, Trading Order Flow. You're not going to get the actual hardbound copy. You're going to get a link where you can download the PDF and print it up. So for those of you that are new to order flow and myself, Michael Valtos, just a brief background on who I am, just so you understand where I'm coming from, where I learned order flow, and how I used it in my career. So I started on the CME floor as a runner with Dean Witter. That was in the early 1990s. Eventually I left the trading floor when electronic trading started up. I felt that was going to be the future of the market, and it was the right decision. After that, I left Dean Witter to join EDF Man on the global macro trading desk. We traded everything, all the commodities in the world. After that, I joined Commerzbank as their licensed Eurex trader. I traded Bunds, Bobbles, Schatz, DAX against all the U.S. products. I was based in Chicago. I was one of only of a handful of people that had an actual Eurex trading license. After 9/11, I left Commerzbank, and I took some time off. And then after about 6 months, after sort of decompressing from the finance industry, I got back into trading with Cargill. Cargill is the big commodity trading firm in the United States and the world. It's a privately held company, but if it was a public company, it would probably be ranked now probably about the third or fourth largest company in the United States. We traded all the commodities around the world, not just commodities, but everything in the supply chain, including the shipping. So, we had a very good idea of, the real supply and demand that was going on in the market. After Cargill, I joined JP Morgan in Singapore. I spent 8 years there as vice president of futures trading. After my daughter was born, I left JP Morgan and I started writing my book, and eventually, I came up with the Order Flows Trader software. That happened in 2015, so it's going on 5 years now that we've been around in the market teaching other traders how to read order flow. And really what I decided to do is I wanted to take all my experience as a trader and put it into a software platform so other traders can take advantage of it. Because quite honestly, there's no trading floors, there's no CME CBOT trading floor with a lot of traders running around screaming. That someone that really wanted to learn how to understand the market could have a low barrier of entry. Now everything is traded electronic, and trading is a lonely business sometimes, especially if you're getting started, you don't know anybody. And I wanted to have a software platform that traders can use to take the analysis that professional traders do and use it themselves. Now, the Order Flows Trader is an add-on for NinjaTrader 8, and the charts you see in this presentation are generated from my software, the Order Flows Trader. And basically, it takes the time and sales data, the tape, so to speak, and puts it into an easy-to-read format and highlights to the trader actionable activity in the order flow. In the order flow, there's a lot of stuff going through. A lot of times it doesn't necessarily mean anything, but there's going to be certain times when something is happening in the order flow, a big order is going through that, as a trader, you can take advantage of. Now, before we jump in, just a brief disclaimer, futures trading contains substantial risk and it's not for every investor. You should only trade with risk capital you could afford to lose, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Basically, if you can't afford to trade, if you're on a very tight budget, save up. The markets are there. They're going to be there in the future. They're not going anywhere. Take your time while you're saving your money to start trading. Take the time to learn, right? Learning is free. Now, if you turn on the TV, obviously the last couple of days, you think that the markets are going to go to zero. But, the reason not to get worried is the markets go up, they go down, right? We've been through, just in the last, seems like every 10 years we have a big crisis. Although since Trump's been president, it seems like every other week we got a big crisis. But with big price movements and good volume, that equals opportunity. I know a lot of traders who have done very well with this recent market activity. People that were normally making $1,000 to $2,000 a day, all of a sudden are now making $3,000 to $4,000. How long is this going to last? I don't know in terms of the market volatility, but you have to take advantage of it when it's there. If you remember 4 or 5 years ago, most of the day, most of the time in the S&Ps would have ranges of 15 points, 20 points would be considered a big range day. Now we're doing that, times 3, times 4, times 5. We're getting 100-point ranges in the E-mini S&Ps, which is pretty big. And coronavirus, impeachment, Soleimani strike, going to war with Iran, Iraq, the trade war with China, that's just this year, right? The news comes so fast and furious that, it's almost like every Sunday night when the markets reopen, everyone is all worried that the markets, the world's going to come to an end, and it's only February, right? We got the election in November, so I'd imagine there's probably going to be a lot more roller coaster ride in the market, right? But don't don't fall into this thing that, oh my gosh, this is out, or this happened, that, oh my god, the world's gonna, you got to be worried about it. Trade the market. Don't necessarily trade the news. Trade what the market's telling you. You know, Traders are panicked. I know a lot of people say, "Oh my gosh, this is the beginning of the end." I know people literally every Sunday night, market opens up lower, and they think, "Oh, this is it. This is the beginning of the bear market." They've been saying that since last year, every Sunday night. But you have to understand what's happening in the market as it happens, right? You have to be a proactive trader, one who actively reviews the market's conditions, the structure, and overall trend. Don't let emotions, news reports, the talking heads on TV, don't let them influence you. You have to sort of put them aside, block them out while you're trading. Trading decisions are made based on current supply and demand movements occurring in the market. The market doesn't move because price hit a moving average or we crossed, oscillator across zero. It moves on supply and demand, and that's how people and traders decide how much something is worth. And the best way to know what something is worth is to see how much traded, the volume at a price. Now, if you're looking on a normal bar chart, right, your normal candlestick chart, you can't tell that, right? You just see where price opened, what the high, the low, and where it closed for that period is. You got to be Superman, basically. You need to have X-ray vision to see in the market. But if you have a chart that takes that information that just goes into a normal bar chart, but puts it into an easy to read format, right, like a volume footprint, then everything is going to be revealed to you. Imagine it's like playing cards, playing poker, but being able to see the other players' hands, right? So you know what they have, before you decide to stay in the hand. It gives you an advantage over other people that are just looking at a normal bar chart. However, looking at the order flow, you have to know what to look at. You have to know, you have to understand, how to use the different data points in order flow to your advantage. And there are 3 key data points in order flow that you need to know: delta, imbalance, and point of control. Now I'll just explain to everyone just really briefly. Delta is the net difference between aggressive buyers and aggressive sellers in that bar. And if there's positive delta, that means buyers are in control. If there's negative delta, sellers are in control. What do I mean by aggressive buyers and aggressive sellers? Well, if the market is, markets trade in two-way auction, so there's a bid, there's an offer. But the price isn't going to move unless somebody buys the offer to move the price higher or sells the bid to move the price lower. The person who buys the offer or sells into the bid, that is the aggressive trader. And when you have more aggressive traders on the buy side, then you have what's called aggressive buying and you have positive delta. If you have more people selling into the bid, you're going to end up with negative delta, and you're obviously going to have sellers are in control. Now, the next point is imbalances. And again, it occurs in a two-way auction between the volume traded on the bid versus the volume traded on the offer. And if it's greater than 4-to-1, generally, some people use different ratios, some people use 3-to-1, others use 10-to-1, then you'd consider it an imbalance. So imagine, you have a tug of war fight. You got two people on one side, you got 10 people on the other side, both pulling the rope. Which side do you think is going to win? It's going to, the side that has got the 10 people is going to win, right? Because that's imbalance, right? The battle between 2 versus 10 is, it's out of whack. Now, the third point of order flow is point of control. And it's simply the price level in the bar where the most volume traded. And what makes it so unique is that it can act as supply and demand over the next bar or bars, right? And what I mean by it's just the price level in the bar with the most volume traded. Well, you take the volume that at a price level, the volume that's traded on the bid, the volume traded on the offer, you add it up. If that price level in the bar has the most volume, that's your point of control. Generally, it will occur somewhere towards the middle of the bar, because you got to think of equal distribution, but they don't always occur in the middle of the bar. Sometimes they occur in the middle, sometimes they occur at the extreme edges, or sometimes they occur in the top, top quarter or bottom quarter. They could appear anywhere in a bar, and oftentimes where they appear in a bar is very revealing information to a trader. So when you put delta imbalances and point of control together, you see the shifts in supply and demand more easily, right? The problem is now in your rearview mirror of how to figure out what's happening in supply and demand, because now you have the solution by looking at delta imbalances and point of control. Now, this is our order flow chart, okay? And this is S&Ps, this is yesterday. E-minis, this is a 1-minute chart. Market made that new high there at 31.75 and a quarter. That immediately sold off. It sold off about 20 points, okay? But if you're looking at a bar chart, you're not getting much information. But if you're looking at an order flow chart, what do you see? Well, when we made that new high, if we look at the delta will appear along the bottom of the chart. We see that you got negative delta up around the high, right? You see selling imbalances coming in just after the high is made. And more importantly, you also see lower points of control in each bar as we start moving away from the high. So think about it. The market was exhibiting strength as it rallied, right? But after it made the new highs, it's now exhibiting signs of weakness, right? The market went from a demand-driven market to a supply-driven market. Market went up. Demand was there. Everyone was happy to buy. It hit this level. All of a sudden, new supply came into the market. New sellers came into the market, and the market dropped, right? That's what I talk about when, understanding supply and demand and how you can see it in the order flow. Okay, so this is E-minis again, right after that move up, we started coming off, right? It was kind of a choppy swing low that we put in. You can see, you got red bar, green bar, red bar, green bar, red bar, green bar. It's like, it's frustrating as a trader. This is where traders, get chopped up in this sort of back and forth activity. And, as a trader, you sort of want to get a grasp of, okay, what's going on? Imagine, it's like you see those movies, right, from the 1940s where the guy flies the, the airplane, the propeller airplane up, and then he's going up and up. All of a sudden, the engine kills, right? It just dies, and it starts falling down. He's thinking, oh my God, he's pushing all the knobs, trying to figure out what's happening before the engine starts up. And it's the same way with the markets, right? Oftentimes you get the market is very choppy. You don't know which way is up, which way's down. And then you're looking for some signs, and you'll see it in the order flow, right? And so if you see the two boxes down at the bottom of the chart, that's the delta, right? We see the delta starting to put in some signs of life, starting to get strong, right before this rally up, right? The first box, you had 481, 498. Market started putting a little bit of rally, some selling came back in. Then the delta started growing again, 73, 270, 2,300 as the market finally righted itself. It had that false start a little bit earlier, couldn't get the third positive delta in there. Finally, it hit that level where the buying came back in. You're seeing buying imbalances in the bars. You're seeing the points of control migrate higher. Now, oftentimes, on choppy market, volatile markets, you put in these nice V-shaped turns in the market. And yesterday again was one of those type of days. But if you're watching what's happening in the market, watching the delta, watching the points of control in the market, then you sort of have your thumb, your fingers on the pulse of the market as to what's happening, right? We put in this nice V-shaped bottom, but when we put in that bottom there, 1014 right in the middle, we don't know that that's going to be the bottom. You're going to look for some signs in the order flow that, hey, the bottom has been made. Now we're starting to rally. And what do you see? Well, on the way down, you're seeing selling imbalances. As you hit the low, you start seeing buying imbalances come in. More importantly, you're starting to see the positive delta come in each bar, having positive delta. You're starting to see the points of control migrating higher. I'm going to go a little bit more in depth into the points of control a little bit later. But you putting those three together, you can understand that the low is being put in, and now we're starting to move away from that low. The buying is coming in, right? We've gone from a supply-driven market as the market went down to a demand-driven market as demand is coming into the market, and we start rallying. So this is gold, okay? And we're just going sideways, right? In this box here, we're going sideways for about 15 minutes, and actually it's longer than that. Prior, we were also going sideways. But there's no real catalyst in the market to tell you, hey, that this market is getting ready to start moving higher or lower. But if you're watching the delta as you're coming towards the end of this sideways activity, although at this, you don't know if the market is moving yet, but you could just see the delta is starting to string together bars with positive delta. Before you'd get one or two bars with positive delta, one or two bars with negative delta, but nothing concrete. And then, towards the end, the last 6 bars, all 5 of them are positive delta, one's negative delta. More importantly, in the circle, you see 3 bars there with higher points of control, right? And that's important, as I'll explain later. Now, this is crude oil yesterday. It's funny, crude oil is come off quite a bit, but I went to get gas, but it seemed to be higher than it was a few weeks ago. But you had 100-point sell-off, you had a $1 sell-off, 100 ticks in the crude, and you want to get into these moves as soon as possible, right? Unfortunately, a lot of the ways people approach the market, they're getting in late. Fibonacci, okay? I'll be honest, I've very early on in my career, probably about 5 or 6 years into my career, there was a floor trader, Hezi Levy, taught me about Fibonacci, and even he wanted me to work for him, but I just couldn't at the time. And he taught me the importance of looking at these retracements. So, in the back, I always still look for certain levels, 50%, 38%, 61%. However, you got to realize, the world doesn't revolve around Fibonacci, right? You don't go to the barber shop and and they ask you how you want your hair cut. Oh, just take 38.2 off on the side, 23.6 in the back. No, I want it cut like this, right? When you cook, you don't the recipes don't say, um, put in 38.2% of salt, of a teaspoon. You put in a teaspoon or something. But nevertheless, 50% is a respectable level, and the markets do react around 50%, 38%, 61%. So if you're a Fibonacci trader, okay, and you come back here, right, off the high to the swing low, it pulls back about 50% around the 50-12 area. Yeah, it gives you a great shorting opportunity. Excuse me. And then, you get short around the 50-12 area, it makes a move down to 49, 50, 49, 40. That's a nice trade. Okay. Now, if you're a traditional head and, technical analyst, you got a nice head and shoulders formation here, right? But if you trade head and shoulders, you got to break the neckline, right? And then you're going to measure down, the distance from the head to the neckline, down below, which also works out to about, around the 49.40 area. Again, another nice trade. Here you're catching 40, 40 cents, 50 cents, on the 50% retracement, you're catching about 70 cents, I mean, decent trades, but where would you rather be short from? The 50-40 area, the 50-10 area, or the 49.88 area, right? Well, you're going to want to be short from as high a level as possible. And order flow, if you were watching the order flow yesterday, when you hit that high, there were some very negative signs in the order flow that this market, is getting ready to potentially sell off. So what were the signs? Well, at the high, there's what I call a ratio and divergence, right? Divergence is a new or equal high with negative delta. A ratio is something that's unique to my software that, calculates the order flow in the bar, right? And there's going to be bearish ratios. It'll appear above the bar in a blue number or below the bar if it's a bullish ratio in a blue number. If it's just a black number, that's just your normal order flow going through. But even if you don't have my software, even if you're just using a plain old regular order flow chart, what's happening in the delta? On the move up, you're looking at predominantly negative delta. You get a few bars with some positive deltas. Here was a nice strong positive delta of 884. As you make that new high, by a tick, you follow it up with a new high by another tick and just go sideways before you get that bearish sign in the order flow. Now, what else though? But as you going up into the high, it's negative delta. You hit the high, still negative deltas. Start coming off the high, more negative deltas. Supply is coming into the market, right? And that's important information that, if you're looking at a bar chart, you're probably not going to notice. Now, here's more of a bigger picture of that footprint. So you can see, from earlier going into the high till after the high is made, you got that little bit of a pullback towards the high and keep selling off. You got weak delta going into the high when the high is made and after the high is made. Now, I give you a tip, right? Institutional traders don't wait for the high to be made and then start selling, right? What they're doing, they recognize, their institutional traders are involved in the market in ways that retail traders aren't. And no disrespect or anything like that, but what I mean is, they're often got other deals going on in the physical market, and things like that. That they're going to know these levels of resistance or support better than most retail traders. But the point is, as a market is rallying, institutional traders are selling into that rally because that's going to give them the opportunity to move more supply, right? They don't wait till the market makes a high and say, oh, hey, we made a new high, and then they start selling. They're already, they're 3 steps ahead of you. They realize that, we're coming up to this level. I know that at this level, this, and this, is going to be overpriced because of these other factors. They start selling as the market is making that high. Once that high is that's why you see all the negative deltas going up into the high because they keep hitting those bids there. People are still excited. Hey, we're going higher in the crude. I better start buying. Well, they're buying. Who are they buying it from? They're buying it from the big oil companies and the big traders out there that know that, hey, at around this 40, 45 area, it's a great opportunity to short this. So, there's a lot of information in the order flow as you're coming up and making this high that's bearish, right? Now, once you start selling off, you sell off this box. The first box is the 50% fib level. The second box is the head and shoulders trend line area. But look at that whole time, it's still all negative delta. I mean, those are legitimate places to sell, but what would you rather sell? 30 cents higher than the 50% fib level, 50 cents higher than the head and shoulders trend line break. You're going to want to sell as high as possible. And order flow gives you that ability to see what's happening in the market even before you hit those levels. Now, delta is going to help you see shifts in supply and demand, right? Delta is going to help you see when a market is transitioning from a demand-driven market to a supply-driven market, from when a market has been moving up to when it sort of stalls and starts moving down. Supply is coming into the market, or vice versa, right? From a supply-driven market to a demand-driven market. Everyone is distributing supply, getting rid of everything, but all of a sudden it hits such a low price that demand starts coming in. People are saying, hey, you know what? I could start buying it. Perfect example, this coronavirus, right? Face masks, face masks, a joke becoming the new Bitcoin. Prices have I'll say skyrocketed, but doubled, tripled, and it's very difficult to find them if you go to stores. And I noticed this back in January. I started buying face masks, because I've got 3 kids and obviously my wife, but I started noticing that scarcity even on Amazon. A lot of them were sold out. And why? It's because of demand. Demand is there. Now prices are going higher. Everyone is running, there's scarcity, supply is less, and demand is greater. That's why prices are going up. Some of these face masks, back in January, you could buy a box for, $8. Now, you're paying $20 a box. Now I'm going to show you a quick way to determine if market's coming out of consolidation and starting a trend. Okay, and it deals with point of control. Okay, and remember, point of control is simply the price level in the bar where the most volume traded. And like I said, it can act as supply and demand over the next bar or bars. Now, thing to remember, right? Every bar has a point of control. It's just there's no fancy math involved here. There's no calculus or anything. It's just simple arithmetic, the price level in the bar with the most volume. People like to try and make things complicated. It doesn't need to be complicated. It's important because in a basic sense, it helps a trader determine where value is in a bar, right? Oftentimes we look at the market on a bar by bar basis, right? Volume profile is nice. I have volume profile, I use volume profile, but as a trader, it's better to have a grasp of what's happening now, where the value is now, rather than the value for the day, because, we may not come back to the day's value area, so it's on a trending market, a market that's moving higher, right? I know value is at 45, but we're trading 65. Well, okay, yeah, I know value is at 45, but we're trading 20 points higher. I can't do anything really with that. I want to know where value is, on a much tighter time frame, a much smaller time frame. And how you're going to see it is on the points of control. Now, like I said, each bar has a point of control, right? So there's this phrase that I use, it's called migrating points of control. And really what I'm looking for is 3 points of controls moving in a certain direction, 3 green bars, 3 up bars, 3 green candles, each one with a higher point of control is telling me the market is moving higher. If I have 3 red bars and each bar has a lower point of control than the previous bar, it's telling me the market's moving lower. So take a look at this, right? This is E-minis, it's an 8-range chart. Market sold off. We start putting a little rally. Okay, then went sideways. Okay, fine. Well, I'm curious to know what's going to happen. Are we going to continue this little rally back up, or are we going to continue back down? Are we going to come out of this sideways action and go up, or come out and go lower? Well, if I'm watching the points of controls, of course, I could also watch the deltas. I see deltas getting negative as we're coming out of this box here, the sideways box. But more importantly, I see the points of control. I got red bar, red bar, red bar, each bar a lower point of control. Obviously, I got selling imbalances as well, which, helps. So, this is going to give me a very high confidence trade, right? That because I know that I can combine, okay, I got lower points of controls, I've got selling imbalances in the bars, I've got negative delta, and it's getting stronger, minus 248, minus 328, minus 579, that this move is going to go down, right? And we do, right? We do sell off from 52 down into the mid 40s over the next 3-4 minutes. Okay. Now here's again something similar, right? We started making this move up. We're going sideways, came sort of below this sideways activity, started rallying. I got 3 bars up, each bar higher points of control. The deltas, 86 minus 33 minus 187. I got some buying imbalances. Okay, fine. I'm convinced maybe this market's going to go higher. But what does it do? It just starts going sideways. Oh God, this is the part that kills traders. You could be correct on your market direction, but then it goes sideways, and you sort of then you got to go through the whole trade management thing. Oh my gosh, should I stay in the trade? Should I get out of the trade? And then later, as you start coming out of this, the sideways activity, you're still in here. I see 3 bars up. I got positive delta, which is a good sign. I see points of control, each bar higher than the previous bar. So I know that this market has a good chance to go much higher, and we do. We go from the 43, 44 area back up into the 53 area. Okay, same thing, going sideways, right? And I get the 3 bars here, positive delta, getting stronger, 73 to 72,305. I see higher points of control in each bar. Obviously, I see buying imbalances. One bar's got 3, the next one's got 2, the next one's got 6. So it's telling me, hey, there's more to this move. Just look for this market to go higher. It does. I hit these 2 areas where I got 2 red bars. It doesn't necessarily mean the move is over because I got a red candle, right? We can't even put together more than 2. They do have lower points of control, but then there's no 3rd bar there. There's no 3rd bar on the next one, and we still continue to keep going higher. So how would I use it? If I was long in the trade, on a multiple position contract, I might take some off here or here. It depends on your trading style. So, just to recap, what to look for is in the migrating points of controls is 3 green candles up with each with a higher point of control than the previous one for a buy. For a sell, it's 3 red down candles, each with a lower point of control. Okay, it's simple, right? This is 10 years, right? A very liquid market, a great market if you want to trade size. I know some guys that they trade this market. Their clip size is 100 contracts. They only need to make 1 or 2 ticks a day, and then they're done. Period. But watch this, right? It's a very slow moving market because the volume is so heavy. Here you got 1, 2, 3 on the left, pauses, goes sideways, starts grinding a bit higher, another 3 as we going higher, right? You hit the low of the day, right? This red line down here is the low of the day. And then you start marching up higher points of control, right? You got a prominent point of control, which I'll talk about in a minute. And then you start marching back up again, right? So it's information that's telling you. Obviously, we got positive deltas there, which is also a good sign. On the second one, you see buying imbalances come in, which is a good sign in the 10 years because they trade such heavy volume that sometimes it's difficult to get a lot of imbalances. Now, there are times when point of control acts as support or resistance, right? And we call these prominent point of controls. And the order flows trader software will highlight them on a chart. Remember earlier what I said about point of control being potential support or resistance, right? This is why I created my software, is because I wanted the software to show me where these areas of support and resistance, where these points of controls that really matter are appearing, right? I used to do this in my head actually, but I realized, that there's a certain sort of equation that goes into it. But what we do is we highlight them, blue, cyan color actually for support, or magenta for resistance, right? And you can see here, right? The blue circles are all the supportive points of control, prominent point of control. The magenta is the resistance, right? So you can see how the market reacts when we hit those levels. Now, like I said, volume profile is a great tool, right? And there's a lot of people I know that use it, but you know, I want to know what's happening right now, right? It's nice to see where the day's value area is, where the day's point of control is, but as a trader who's trading right now, what's happening, if we're 20 points away from the point of control on a daily basis, that doesn't do me any good. I need to know, I need something that's going to tell me where the value area is right now, and the points of controls do that for me, right? And like I said, the prominent point of controls tell me these areas where there is support or resistance right now based on the order flow. So you can see here, right, 8 range, this is a crude oil chart. You get the red circles are the bearish points of control. You see how the markets just react right off this. Now this, when it forms on the bar, right? If it's a prominent point of control, it will color it in as soon as it happens. Obviously, if the conditions change during the bar formation, it will go away. And once the bar is closed, it won't reprint, it won't change, but it'll appear there in real time as the bar is trading, as long as the conditions are met. So I know that as this bar is forming, I see this bearish point of control forming, and I see we're trading, starting to come off. I'm ready that, if this bar closes, this next bar, I'm looking to get short right away. There's another example, right? Prominent point of control acting as support. Sometimes people get all caught up in support and resistance, thinking it's got to be one price level. It's not. Right? Support, especially if you're looking at a support area or a resistance area and the market moves away, comes back to it, it doesn't just come right back to the tick. Oftentimes, if you're pulling back, especially, you're pulling back 10, 20 points to an area, it doesn't often just stop right on a dime. It's especially in these markets that are moves are over exaggerated, it will overshoot it by a couple of ticks. But you can see here, right, my prominent point of control, market comes right back to it, gets through it by a few ticks, but then keeps going back up, right? It hits that support area. Now, when you put some of these things together, prominent point of control, migrating POCs, you could get in on moves very, very early. As you can see here, right? You have your low of the day, you got a prominent point of control, you got the migrating points of control. Markets, wants to go up, pulls back down, pulls back to this second prominent point of control. The low of this bar is the previous prominent point of control, your support area. Again, then the market pops back up, comes back in, puts a higher prominent point of control in, doesn't pull back as close to the low, then you're seeing the migrating points of control. So, at this low area, and again, I'm not even taking into account the deltas, which, are kind of mixed in all honesty. I'm not going to say that, oh yeah, these are very bullish. They're kind of mixed, honestly. But by looking at the point of controls, I know there's support in this market, right? I know that, if I'm looking to buy, I've got support I can sort of hide behind. It's going to give me, potentially, a much lower risk, basically, because I know that I've got support here, that if this support breaks down, you got to get out of the trade. So, point of control can help keep you on the right side of a move. It's going to help alert you when the move is stalling, and it's going to let you know when the move is over. So for example, this is euro currency yesterday, right? Nice move up, right? Then what happens? Start moving down. As you start moving down, what's the sign that you're moving down? Lower points of control in each bar, right? You have this nice demand-driven market, stops, supply comes into the market, starts getting distributed, supply is still there, and it helps drive the market lower. Wheat, okay, I just want to show you another market besides crude oil or E-minis is wheat. Wheat grain markets are great markets for trading with order flow because they're really supply and demand driven markets. So here, right off the low of the day, we've got migrating higher points of control. We've got multiple imbalances. Obviously, we got positive deltas. And, over the next, well, this is a 5-minute chart, over the next 1, 2, 3, 4, 5, 6 bars, we make a move from 531 up to, 536. So it's a nice move. So hopefully by now you can see how order flow can easily identify trade direction. And by understanding who's clearly in control at a particular time during trading, you can find low risk, high opportunity trades. But more importantly, order flow is going to help you get into trades sooner rather than later, which gives you potential for more profits, right? That's why we trade is to make money. We don't trade necessarily for the exercise. We do it because we want a better life. We do it because we want to give back to society in the sense of, making, donations, charity, etc. Don't overcomplicate trading. Keep trading simple, right? And an order flow is trading to me in its simplest sense. So, if you're interested in learning more about order flow, you can get my book. Go to orderflows.com/book.html. And it's going to take you to this page. You have to enter your name and email, hit submit. Then the next page is going to pop up the box, the PDF that you can download. Okay, don't search your email for it. It's not going to come on the email. It's going to, after you enter that information, it takes you right to the next page. Now, if you're interested in the software, right? Because by now you can see how just one piece of order flow, the point of control, is going to give you great training opportunities. But if you say, Mike, I'm interested in your software, I watched this presentation, I want to learn more about it, go to orderflows.com/special.html. All my pages have .html on the end, and it's going to do, there's a special deal for everybody on the software. Now, if you're not convinced of my software, other people have been writing great things about it. There's Sheila writes, the order flows trader software is remarkably helpful. I can clearly see now what's happening in the market, like for example, who's in control of the market on a very specific time and who's getting weaker as well. So again, if you're interested in the software, it's orderflows.com/special.html. To get my book, go to orderflows.com/book.html. So I'll throw it back to you, Anna. I sort of ran out of time for questions, but I'll if there's questions, people just send me an email at mike@orderflows.com, and I'll do my best to get back to you, um, you know, today on your question. So Anna, if you're there, I'll throw it back to you.
Yeah, let's see. Let me kind of get all my stuff configured for everyone out there. Hello, everybody. If I could just get I guess a Y or a yes, if everybody can see my screen, it's Simpler Trading, the Moxie method. And then if you guys can all hear me, I'm going to assume you can hear me because hopefully I'll be getting a couple of yeses from you. There you go. Thank you very much. Starting to get those coming in and making sure everybody's around. So just a little bit of context. I'm actually currently right now in Cocoa Beach, Florida. I'm visiting, actually I have a friend in Seattle. His parents are also from Seattle, but they have a winter condo out here in Cocoa Beach, Florida. And so he called me up. He's like, hey man, I'm gonna be out there for a week or so. You wanna come join me? I said, yeah, sounds like a good time. I'll take a little quick vacation. I'm usually in Austin, Texas, and with this, I came over. I just flew out here, I think Tuesday. I'll be here till Monday. Weather's great. Go to the gym in the morning. The market is having a bit of a, I don't know, maybe a panic attack, something like that with all this coronavirus situation. And you know what? My stops get hit. I'm out of the market. Not too shabby. The whole thing is down 10%. I'm down like 1.5% overall. I'm looking for opportunities to start making some money, say with gold and some other positions that aren't going to be sensitive to the market. And meanwhile, I'm hanging out on the beach. We'll be walking the beach later today, actually, probably when I'm finished with this. And then this is the life I live. So I just wanted to be able to communicate to everybody out there where I'm at, what I'm able to do. I'm on my laptop. I got a second screen sitting right next to me with all of your comments here. So let me know if you have anything to say. And just living the life. I'm having a good time. So just, I think that's kind of where people want to know that we can get to, you know, because I know that I got into trading because I wanted to be able to do exactly what I'm doing. I didn't want to necessarily have that 9 to 5. I didn't want to have to ask my boss for time off and go do someplace. So I can work remotely. I put in a couple hours today, and then I go out and do all the other things I want to do. So just want to let you guys know that it's possible. All right, so anyway, kind of get into the presentation, and happy to jump into some charts at the end of this if you guys want to, and it'll be great. Oh, good, thank you. Hear me loud and clear, and projections, okay. So let's see, I'll just take that real quick. So what I showed in gold, it was JNUG, and I did that. So I don't get it, I wasn't into GLD, but I got into JNUG because it's a triple leverage ETF of the gold miners. So we made a quick 27%. It's since come all the way back down. I'm looking for a reentry, but it's not there yet. So we'll kind of get into that at the end of the presentation. As I said, happy to get into actual live charts and show you exactly what I do. There's no smoke and mirrors. Jump right into it. You know, I'll show you some tickers. If you want to see it through my system, you just let me know. Then we'll kind of go through there. So this is literally how I generate 10 to 200% returns, even if you're new to trading stocks. I do actually have the case where I made over 200% on just a stock. All right, if you can't see my screen, maybe log out, log back in, because so far everyone says that they're having a good time with it. So sometimes it's an individual situation. All right, I always like to kind of lead with this. In fact, I'm gonna have to revamp it at some point because I bought a house a few months ago, and so my account took a giant hit because I had to liquidate some money to go buy that house. And so I need to kind of figure out a new something that I can do, because I know this one's starting to get a little bit long in the tooth. But this is one of my accounts. It's a Roth IRA account, so even a little bit more restrictive. I don't trade options. This is all with stock. And what I did is I got it from 60,000, and then I got up to 125,000, which is 86%. And then I just wanted to snag this right here, 136,000. It was 103%, you know, I like round numbers, in just over a year. It was 13 months. And so that was pretty good. I'm located in Austin. I'm kind of in North Austin. So currently I'm in Cocoa Beach, Florida on vacation with my buddy at his parents' condo out here right on the beach, but normally Austin. All right, so guys, what you're gonna be discovering tonight is how I reliably generate 10 to 200% gains in just minutes a day on what I call moxie stocks, and how I target powerful short-term pops and drops for extraordinary results. And I know the kind of like, what was it? Forgetting Legally Blonde or something, you know, pop, lock, and drop. My buddy is always kind of giving me a hard time about doing this, but it's important that we know when price is going to drop, because we could be in a position going up, doing well, whatever, but if we are surprised when something's going to drop, then we lose money and our account gets damaged, and we need to be aware of that. Or if something's going to drop, we don't want to get into it, because we don't want to get into something that's just going to get us taken out on a stop. So knowing when the market's going to pop and knowing when it's going to drop is just as important, I think so. Or if you want to short something, you need to know when something's going to drop so you can short it. And then, of course, how I get into the right stocks at the right time and seek to avoid bad trades. So here, I love leading them with this chart. My secret for precise stock trades. And I say you don't need to be a stock picking pro, because the combination of the rules that I teach and the indicator that I created, the Moxie indicator, you can see these powerful pops and drops with the checklist, the trading checklist that I employ. And so what I want to show you here is this is the hourly chart of the S&P. It's a little bit in the past, but what you'll see is, well, let me start here. One, you got the Moxie price trigger, so that's telling you that energy is now negative. And then when I call this an inverse trampoline move, when price gets over the 50 SMA and the Moxie indicator is below 0, that should not exist. So this is those drops that I'm talking about. And look at what happened to that. And the only thing I love to show about this is the fact that the proof is in the pudding. Like, I don't make this stuff up, because look, here it is again. Price is over the hourly 50, and notice the Moxie indicator is below 0. If you guys see, it's the same situation, and you can see the Moxie price trigger right there. It's the same exact situation. They happen twice in a row, and look at the results that we got from that. So proof is in the pudding out there. San Antonio. Yeah, I was just actually down there for a little bit. Oh, hey guys. Yeah, I got some familiar names and faces out there. I love it when you guys tune in. All right, so I'm able to look beyond price. That's the whole point of what I'm trying to show you here is, you know, price I often say is kind of a facade. And so we want to know what's really going underneath the surface. And so I'm able to see what's going on beyond price. And through the analysis of the data, I'm able to see consistently when a stock is likely to pop or drop. And the method I developed routinely finds stocks that can move 10, 20, or 200%. I mean, my bread and butter are stocks that move 15 to 40%. I can get those things, all week long. My method has allowed me to grow my account over 103% in just over a year, as I was able to show. And then I'm able to catch the big moves like this. So this one was INMD, and what you can see here is there's the Moxie price trigger right there, the green trigger that tells us that that the energy is now positive. And then you can see here price bounced right off of the 50 SMA, and then it continued. Now I'll just kind of dip here, but this is what I call a regular trampoline move. We'll kind of get into that a little bit later, right here. And then this thing just kept going up. But what you'll see, Moxie price trigger, and then we go up here, my checklist says, it's a good place to get out right there. That's 100% gain in just over a month. And that's just with stocks, just with stocks. That's what I like to do. All right. And then you'll see how it's possible. So again, I don't sit at the computer all day long. I'm a swing trader. I'm an end of day trader. I don't move money until the last hour of the day. So just at the end, that's when I'm starting to scan stuff and I'm starting to look around. And I'm not a day trader, and I don't trade at the beginning of the day. So in fact, it just takes me minutes a day to do this. I'll show you one more time. You can see the Moxie price trigger right there. Price stayed over the 50 SMA, and then boom, that's the trade. This is the kind of pops that I'm looking for. This is what I'm looking for, and that's what I'm trying to find. All right, so here is, again, I'm gonna have to kind of redo this because it's getting a little long in the tooth, and I bought a house, so this took a little chunk right there when I liquidated some money to go put a down payment on there. But July 2017, in this particular account, actually this is the aggregation of all the accounts that I was trading, 120,000. And then July 2018, 203,000. And then July 2019, I worked it up to 517,000. So we really want to see our account go, from the lower left to the upper right, just like the stocks that we want to trade, which is very important. And of course, there are going to be some dips. There were some drawdowns. What was that? End of the year. Actually, I think it was end of the year here, where the whole market was kind of going off, taking a big dump right there. Oh yeah, our show false entry. Yep. So the false entry that he's talking about is what I call an inverse trampoline move. We want to make sure that we don't get suckered into a trade. And the Moxie indicator in my method is actually really, really good for helping people figure that out. I can look at Target, Chewy, and then SDC. So remind me at the end of the presentation, I'll go through those stocks and I'll show you how I didn't get into a stock because the Moxie indicator was telling me that there was trouble brewing. Anyway, a little bit about my path. My dad introduced me to the stock market as a kid. This is my dad in the middle, and then he and I are both pilots. Well, my whole family basically have been pilots all the way up to my grandparents. They were in World War II and all that. And so it was important to kind of know about the stock market. So he introduced me at a young age about the stock market. Case in point, he actually started taking me to stock trading seminars when I was 12. And if you guys have ever been in a seminar like this, I mean, most people are, older and or at least making money. And, imagine like a 12-year-old in there. I didn't really know what I was doing. I couldn't really follow along with all the Fibonacci this and retracement that and logarithms and whatever. But I did ask the presenter up there and I said, is this really possible? Can people make money doing this? And he said, absolutely. He's like, I do. And he said, we're also not born a trader. Like, we all had to learn how to trade. Maybe some of us have a little bit better knack than others, but we all had to learn. None of this is just innate. And so that was actually something that was really important and stuck with me in my trading career when I was having some hard moments. And I said, you know what? There's a way to do this. It can be done. I just have to figure out how to do it. And I feel like I'm there. And so my interest, if you guys understand a little bit about my brain and where I come from, and then you can understand how I see the market and how I try to teach people about it. So I came from Arizona State University. I graduated manufacturing engineering. So I have a very analytical engineering type mind. And then from there, I wanted to learn more about money and help people in the financial sector. So I became a financial advisor with New York Life, got my Series 663, did that for a few years. It wasn't quite the right fit. I didn't really like the whole salesmanship thing, whatever. And I wanted to have a little bit more direct control over what it was I was doing. So I got back into the stock market full time. And from there, you can see there's a little bit of gap in time. I was starting to get my business up and running. And so that's when I created Moxie Trader in 2016. So still doing that. As you can see, I got the Moxie indicator and all that. As I said earlier, my dad and I are both pilots, which is very important. It instilled a lot of discipline in me. And because if you're reckless and you don't follow your checklist, you're really going to kill your account, and then you're going to damage your airplane, you might hurt yourself. And so this whole idea of a checklist and discipline is very, very important to me as a pilot. And I pull a lot of stuff from that and that experience. There are a lot of similarities between trading and being a pilot. Number one, checklist. Pilots have checklists. I mean, it actually had to be invented. I'll get to that a little bit later, but checklist is very important. We have to have an order. We have to go, A, B, C. We can't go D, E, A, and C. So that's important. And then rules. We have to have rules. We need to know what it is we're looking for. We need to know what kind of trade we're looking for. We need to know what is it that we're taking. We can't say go long if price is underneath a certain moving average. So we need to have that. And then discipline, because if we don't have the discipline, then we're not going to follow our checklist. We're not going to follow our rules. We might as well just be throwing money at the wall and hoping it sticks. So we need to have the discipline to make sure that the other two all fall into line. And so all of these are very important to keeping the plane and your account from crashing and burning. Yeah, absolutely, discipline. I see you guys get that. Is that a gold coin around my neck? No, oh, oof. No, I think it was a Yoo-hoo bottle cap. It was bottle cap necklaces were very big in the early 90s. So I'm surprised you kind of caught that, but yeah, I think that's what that is. Oh, that's funny. All right, so a little bit about, like why I'm living the trader lifestyle. I love this. I decided to move out of Phoenix, Arizona, which is where I was born and raised, and I moved to Denver 5 days after my 33rd birthday. I'm probably gonna have to date this because I am just about 35. So that's coming up on me. But yeah, I decided to move there because I thought it would be kind of exciting. I was like, hey, let's go do this. I got my trading well, I got my business going. Let's go do this. And so I decided to do that. You can see on here on the left, reading Trading in a Zone, great book. And this was the apartment that I was in. It had just a gorgeous view looking over downtown Denver. And then I went and did some whitewater rafting up there, and then I learned how to ski. But now I'm in Austin, I own a pair of skis and I have nothing to do with them. So I'm gonna have to now take some trips to go skiing since I spent money on that one. And then, getting to spend time the way we want. And, I kind of referenced earlier about the 9 to 5 and all that. I got my family up in Seattle. This is my youngest niece. My sister just had her child. I think she's just about 2, actually. So I get to go up there. I'll probably be up there. Actually, I think I was up there for Christmas. I'm going to go up there again in June, and then I'll be up there for probably August, my mom's birthday. And it's fun. I get to go up there, hang out with my family. I do my trading. My dad sits in the office with me, and we talk about stocks all day long, and it's fun. I can do this wherever I want. And I think that's what we're all trying to accomplish. So if this really resonates with you guys, then this is what I do. Well, and I know that trying to do this is going to be difficult if you don't have an edge. It's going to be hard to grow your account. You can't find the right trades, and you're missing out or getting in too late. And trust me, I get that all the time. I've gotten better about it as we progress. But yeah, there are trades everywhere. There's always another train. There's always another trade coming. We just have to jump on, and we have to figure that out because we have to have our process. And so the big leap. And this is where the struggle that I faced when I made the big leap, finding to decide to leave corporate finance and say, wow, am I really going to do this? Am I going to go back to being completely self-employed? And I thought about this. I said I could have gone into aviation or engineering, both the things that I really love to do. But I really chose trading because I thought about the freedom and the ability to leverage my time and to leverage my money. I mean, think about it. I could move $1,000 or I could move $100,000 with the same click of a mouse button. And that really attracted me because I said, once I get this, then you just start scaling up and now you make more money. And that I really like that idea. And so I spent years studying the squiggly lines that really made no sense to my brain and to my eyes, and I just couldn't find consistency of why price moved. And so as I started kind of going out there and figuring out, well, what do I need to know? And so I found some mentors and some other people that I would listen to and follow. And I got to tell you, there's one guy out there, a great guy. I followed him a lot, but I just couldn't learn anything from him because this is literally how his charts looked. I mean, I could not see anything. I couldn't even see where price is. I don't even know what's happening here. But he made money. He was very wealthy. It's a system and a style that worked for him, and there's no way that I'm gonna, knock that at all. But it wasn't for me, and I had to figure that out. So you can see here, I just always kind of laugh when I see this chart. It doesn't work for me, but that was important. I had to figure out what didn't work. And so then I started going back there and reverse engineering and looking at all these charts and trying to figure out, well, what does work for me? And I had started looking at this stuff, employing a few moving averages. And I looked at this stuff, said, okay, why did this stock come into the moving average and roll over. But this stock came into essentially the same moving average and came up and went up. I was like, all right, not that one of these is wrong or bad, but if I knew which direction price was going to go based on this moving average, then I can actually take a trade on it, whether it's long or short, or get out if I need to. That was what was starting to really speak to me. And I thought, okay, I just need to start figuring this out. And so what I started looking at is, okay, what are some of the other problems that I had? And what are the other problems that I keep finding a lot of other traders have? And another common one is that we would get in at a good spot, and it would start to move, but then it would just give it all right back. You're just right back to where you were. And that was another thing that I started to figure out. And I'll show you that some of the little tips and tricks that I find out, but basically, that void right there. And then what about treading water? I mean, I've gotten into this situation too, where we get into something like this and it just doesn't go anywhere. And this could be hours, it could be days, it could be weeks. It just depends on what time frame you're trading. And this is not only uncomfortable, but it's a total waste of our time value of money. And if we put something on like this, it's likely that we're probably going to get stopped out or buy at the wrong place and get stopped out again and just get chewed up. And that was the thing that we needed to figure out, how to get around this. And so I've got some things in my rules and in my discipline on how to do that. And then this one. I got a couple of people talking to me about, yeah, how often have we run into something like this? I think, case in point, the market right now, right? How often have we hit this? We've run into a nice moving average, things are doing well, it's looking good, and then the bottom just absolutely falls out. Yeah, guys, I can relate, I know. So I've got some rules, and part of my checklist helps me to basically prevent about 80+% of things like this. And then trial and a lot of error. It was basically slow death by 1,000 small losses that when I started learning how to trade. And of course, got to be honest, we've definitely had some big, large losses out there too. And I tried just about everything. And I actually had somebody just email me, no joke, last night, said, look, I bought a lot of indicators, I followed a lot of people, and I have yet to actually make money on any of them. And I said, look, I understand, I know where you're coming from. I don't know if I'm the greatest one out there, but I think I have a way of looking at stuff that seems to really resonate with people. So that's kind of where I'm at. And my problem was I just couldn't find a simple, objective way to make profitable trades. And so, as I said, I went back and I started to reanalyze and re-engineer all these things. Remember, these were the same charts. Price fell through the moving average, price bounced off the moving average. This is when I started to incorporate my Moxie indicator that I had designed and developed. The one that fell, you notice how the Moxie indicator was underneath the 0 line the whole time? And then if you see that you skip down on a lower time frame, you see how price was underneath all the moving averages? Well, look at this other one, the one where price bounced. You see how the Moxie indicator started going up like that, and then it started to cross positive. And you see how here price started to get scooped up by the moving average on the lower time frame. This on the lower time frame looks much different than this one on the lower time frame, same with the indicator. And this was the thing that was able to tell me that this one was likely to bounce and this one was likely to drop. And these were the things that I started to see and starting to incorporate and said, ha, I think I'm getting this. I think I'm seeing it. Howdy. Are you in Austin, Texas too, or Texas in general? All right, so what didn't work for me? I told you that one of the big traders that I followed, and I couldn't even see price on his chart, so it was too crazy. I figured, okay, what doesn't work for me? Because if I can do this kind of process of elimination, well, then I'm able to figure out what does work. And what really resonated with me that didn't work were all these squiggly lines. I couldn't see anything. I couldn't tell when the line was starting to turn or when it started to fade off or do this or do that. So squiggly lines just didn't work for me. And I had to kind of redo indicators and put them in a way that I could see better, that would resonate with my eyes and my brain a little bit better. And then this one's always kind of funny, but if any of you are familiar with the Matrix and the fact that there's one particular character, Neo, but the Matrix is basically everyone's living in a computer world, not through their choice. And when you unplug from the Matrix and you try and actually look at it, it looks like this on the left, just a bunch of numbers and codes and weird symbols and stuff, and you just can't see what it is. It's all computer stuff. Well, that is how trading and the stock market looked like to me when I first started. I mean, it was just a bunch of squiggly lines. Nothing made sense, like up, down, left, right, like craziness. But then over time, Neo discovered that he had a special talent, and he was able to start seeing the matrix, and he could actually just read this code and start seeing pictures and images the way that we see normal life. And so this was the transition here that you can see from crazy code to actual images and how he was able to see it. And I feel like now that's how I see the market. I can actually now read the market and read the stocks and now see things, and they speak to me, and now I can actually see setups and see patterns, and I can figure out where exactly I need to go in and with precision and make some trades. Oh, Nick, if you're in Georgia, sun and shining. Yeah, I'm out here in Cocoa Beach, Florida right now. It's a beautiful day. Yeah, Mr. Anderson. That was the matrix reference there. And so what I had discovered is I had built for myself a reliable method for knowing when a stock was likely to pop or drop, as I kind of referenced earlier. And this allowed me to leverage that reliability with minimum risk and time, because think about it. If you know something is going to work out, more than 50% at a time, or say 80% at a time, then you can put some big money on it, and then that's when you start making gains. That's when you start making your count start go up, is that reliability of it. And that's kind of what I've figured out. So now the one thing I referenced earlier was about the checklist. And because I'm a pilot and checklists are very important to us as pilots, I had started to incorporate that as a trader. And what I realized when I was researching this is that the idea of the checklist, even though it's so around us nowadays, actually had to be invented. And it was invented in the late 1930s when the Boeing Corporation was trying to build what became the B-17. And there were a couple test pilots that had some people on board, and they were going to go do a demo flight or something, and they crashed on takeoff. And when they went back and they studied the crash, they found out this little something, it's called a gust lock, that locked the controls for when it was windy on the ground. They forgot to turn it off, and so they had no control over the airplane, and then they crashed. And what we realized is that airplanes had gotten too complex for the human mind. It didn't matter how smart you were or how good of a pilot you were. There were too many things to do that screwed us up, and you just forgot one simple something and it killed you. And the trading is kind of the same thing. It's very simple, go long, go short, get in, get out, whatever. But there are a lot of little things that have to kind of line up in order for this to work. And there might be one little something that you didn't check or you didn't think about, or maybe that moving average is in the way and you didn't do something, and that now just invalidated the trade. And I got that time and time again. I thought, okay, if I could just figure out what it is I'm screwing up on, then I can fix it. And so I started to make a checklist, and this was one of the first checklists that I had made. It's kind of like a flow chart, but it basically does the same thing. And this is very important to me. So make sure you have a checklist for you. I have one. You sign up for my class, you get that checklist that I use that goes along with my trading style. And so I built my checklist. And with that checklist, I had all the data that I needed and that I gathered. And of course, the pilot in me felt right at home, and I started to begin to catch lucrative trades more consistently. And consistency is really the key. And so you'll see this is part of my checklist. Here's the Moxie price trigger. Here's the trampoline move when price dipped below the 50. Then price stayed above the 50. And it just goes. And then I get out when I get the Moxie price trigger to the downside and price crosses the moving average. There you go. That's my checklist right there. Yeah, Clausen, I know. A lot of people's accounts are crashing. Earlier in the class, I was saying that the market's down 10%. I've been in cash, and I think I lost about a 1.5% on everything. So not bad. All right, so my edge, I was finally able to see opportunities to make money where others didn't. And now this is an oldie, but I love it. And I'm waiting to find another opportunity with NEO. But what you can see here, there's the Moxie price trigger, and then price stayed over the 50. And then my checklist right here said, hey, you should probably get out of this. And I did, and then on down it went. So that was a very, very good trade. It's 33% in just a handful of days. And this is the kind of stocks that I'm trying to talk about. This is the pops that I'm talking about, and these are the drops that I'm talking about. This is how I trade. And of course, they don't go all right. My checklist though also helps me know when to get out. I set my stops, but also the checklist tells me, this isn't going to work. And this is how I keep my losses manageable, which is very important to our account growth. So what you'll see here, this was on Goose. I went in here, here's the Moxie price trigger. I was looking for price to stay above the moving average right there, and it didn't. So out, hit my stop. But the important thing is that we keep taking a swing if the entry sets up again. So this is the same stock. What you can see is where I tried to enter right here, the same stock. I kept an eye on it because I said, okay, this first time I tried it didn't work out, but I still see a setup here and I think it's going to happen. Well, price came back down here, did a double bottom, Then we got our positive divergence with the Moxie indicator. We got our new Moxie price trigger. Then you can see price held the 50 SMA right there and then pop. And then this thing continued on up, like right here, 6% gain. This 3% loss that I initially had turned into a 12% gain. There you go. So don't let, just because you get stopped out or whatever, don't let a, one little slap on the wrist hurt your feelings or change your perception. Like there could still be a trade here. Your timing might have been off, but if there's still something good, go back in when you need to. Losses are just the cost of running a business. I mean, you got to think about that. I mean, how many returns does Costco get? A lot, and you can probably call it a loss. And think of it like inventory, utilities, employees, all costs. But losses must be controlled just like expenses. For this example, you can see VIPs. I got in here, thought price was going to keep going up. Nope, it decided to completely turn around right away. So you can see I got out right there, didn't work out, 1.5% loss. That's how you keep it. Not every trade is going to be a winner. But then you got to know when to cash in. So here's another one with Yeti. I'm looking to try and get it back into Yeti, but it has yet to really set up, and now the market's doing thing. There's the Moxie price trigger, held the moving average right there, and then pop. And what I decided to do with this one, actually here's a better view of it. There's what I got in, there's the Moxie price trigger, holding the 50, and then there's where I got out because my checklist and my rule said, hey, you should probably cash in on this one. Here's another example, SurveyMonkey, yet another one I'm still trying to figure out if there's going to be an entry at some point. Here's the Moxie price trigger. Here's price holding the moving average. And then here's where I got out because the Moxie price trigger and because price started to fade underneath that moving average. There's the trade. And that's okay. There was a trade later, but that's a different setup. I had no idea if this was going to keep going down at the time. So I take my money, I take my 17% gain, and I say, thank you, Mr. Market, and I'll just wait for another one. How about this, VFC? Now, VFC in this case was only 9.5% gain. You can see here's my Moxie price trigger. Here is price over the moving average. And then I decided to get out there. Here's our Moxie price trigger and price started to fade. That's all this stock had at 10%, So just because it's not a 20% winner doesn't mean it wasn't a good trade. And you got to be careful because after this, it came right back down and just continued to implode. And then here's another one, MDB. I don't trade earnings, so I wait till after earnings right there. We had the Moxie price trigger earlier, and then boom, that thing completely shot up. Now, I took some off when that happened because it's just prudent to take some off up there, but I was waiting to see if it was going to continue, and it did not. You can see we had the Moxie price trigger, and price started to get underneath the moving average right there, and then down it went. So no good there. Let's see, my win-loss ratio is about 63%. That's where I last calculated it at. All right, so then Okta, here's another one where I was starting to get out of it. You can see here's the Moxie indicator telling us that price wanted to go up in relation, or energy was coming up in relation to price. So when price finally got over the moving average, I got in right there. My checklist said, hey, you should probably take a little bit off right there, and then you can see it kind of imploded. Then it bounced back. It's actually what I call a trampoline move right there, but we'll get that into that a little bit later. And then my checklist said, hey, you should probably take the rest of it right off there. You had a pretty good move. So I did, in fact. And then you can see here, there's that Moxie price trigger to the outside. Gain versus loss. I'm not sure if I really calculate that. I usually have my stop loss anywhere between 2 to 6%. And then my winners typically are, upwards of 10, 20, 30%. Like I just got 27% on JNUG, and then we had like 45% on Bitcoin. So yeah, I got a pretty good ratio on that. All right, so this is where I feel like the rubber really meets the road about all this, about like what I do and how I trade. Of course, my accounts started beginning to grow. I was really starting to get someplace with this, and my friends and family really started to hear about my success. My friends just heard I was having a good time and I was doing well. My family, though, knew my numbers and they could see what was going on. So my mom said, hey, I've just got $6,000 sitting in an account here. Do you want to do something about it? I was like, yeah, sure, I suppose. If I screw up and if I lose it, she's my mom, she'll still love me. So I said, all right, I'll do this. Okay. So we started April something, 2018, just under $6,000 right there. And then during that time, I caught one of my best trades, and this is what I call the Moxie stock. You know how John Carter has his Tesla trade? Well, this is basically my Tesla trade. This isn't the thing that took my mom's account from 6,000 to 20,000, but it sure made a difference. But what you can see here, same process. Here's the Moxie price trigger. I did get in here, and it was a bit of a gap up. Now you got to understand, this is IGC. It was one of those cannabis stocks back in the day, and you know, hot tamale right there. Anyway, it pulled back. You know, this is a dollar stock. It was $3.2, and this pullback was rough. That was very, very uncomfortable, but I had to stick to my rules. You know, price was still over the moving average. The Moxie indicator was still looking good. Everything was looking all right. So I said, all right, I'm just gonna hang in there. And when price started to lift, I said, all right, got to go in. So I added more to that position and pop. Now, due to my rules and my checklist said, hey, probably a good idea to take a little bit off there. So I did, and that was 144% just stock, no options. And I said, all right, let's go see where this thing goes, because everything's looking all right. Price continued to take off, and then we got like, what, 2 days of just straight up moves. And I said, this thing is insane. I'm probably gonna take, I need to take more off. So I took the bulk of the trade off right there with 257% gain. I said, well, I'll just see where maybe, I don't know, the last quarter of it goes. And of course, the next day, price started to implode. I said, man, that's it, I'm good. And I cashed in the rest of it at 231% gain. So there's the stock, that's how I traded it, and that follows all my rules. And there you go, the Moxie price trigger as far as our entry. So this is what it is. I think a lot of us were here trading. What are we trading for? Of course, we want the money. And of course, we want some freedom, you know, all that kind of stuff. But I have people who are in my trading room in my account that there's a grandma trading to try and create a college fund for her grandkids. That's amazing. I have other people who are trying to, I have a doctor in Canada who actually just called me last week. He's like, you know, Canada and their health thing, and they're trying to squeeze the doctors, and they want doctors to work fewer hours. And he's like, I'm getting tired of working all this. He wants to be able to retire. So he wants to figure out how to take more control over his account. I got people in all walks of life doing this. And for me, in this particular case, you know, I'm trying to create money for myself and for my future. But in this case, I turned my mom's 6,000 into 20,000, and then just in time, she was starting to remodel her kitchen up in Washington. And so that's why this statement here, we liquidated most of the account, and now you can see the fruits of my labor is that new table and island and cabinets and I don't know, ovens and stuff. So helped her out with that. 233% gain in just about 6 months on that one. And so I was starting to get a lot of requests to teach what it is that I had discovered and if I could leverage my skill to help others. Now, I wasn't really willing to help, you know, individually trade people's accounts because that was a little bit risky, and you know, whatever. I'm already trading a couple of my family's accounts like that, so I didn't really want to take more on there. And I thought, okay, how do I do this? How do I take what I have and help other people? And that's what I was trying to figure out, is how to leverage my skill and my time with others. And you don't have to be a lone wolf. Like, what we're trying to do is help you pick stocks, because doing that on your own is really tough, and not everybody has a lot of time. And so what I'm here is to help you find those best opportunities, you know, which is why I wanted to show you how to take action on the right stocks at the right time. So you don't have to go out there and be a lone wolf. And so I took action. And that's where I created Moxie Trader, as I talked about in the beginning of this presentation. And so I've been doing that now, what, since 2016? We're in 2020 now. So yeah, it's been a few years running my own business like that. And now I have joined the simpler trading universe, and I'm loving it. My reach is bigger. I get to help more people. I'm getting great feedback, and it just feels really good to be out there helping people. And so if you like what you've seen so far, I'm offering the instant Moxie trade alerts when I see these kind of opportunities to take these profit potentials. And I help guide people, especially when the market's doing something like this and being insane. I say, hey, not a time to be in the market. I will be watching this stuff for you. I will be building a watch list. I will tell you when I'm looking to get in. And I think that's really appreciated. People are very happy. They're like, okay, what do we do? Like, we've never seen this before. What do we do? And so my goal is to help you enjoy these precise stock trades without having to stare at the market all day or reinvent the wheel. You know, people already know how to trade. We just need to convey that information. And so what Moxie Trader offers are objective entries and exits from my hand-picked watch list, and each trade follows my rigorous checklist to help avoid false signals as much as possible. And so what you get inside the Moxie Trader Mastery are the Moxie Trader alerts, you know, direct from me, and market updates. I communicate with everybody. I send out a few alerts to tell people what's going on, you know, do a little hand holding. Like, people hear what's going on with me through how I communicate. And then we get live trading and a Q&A session once a month. In fact, that's coming up right around the corner at the beginning of March. And then we get, you have a trade spreadsheet, so you know exactly all the trades I've taken, what trades we're in currently, and how we've done with those. And so you can see what we've taken and what my stops are and how we've done. And then you get the Moxie Trader Learning Center, which is a whole library of stuff to kind of get you up to speed for my lingo and how I look at stuff, and just some basic things to help you understand how the market works. So as I said, we got the live trading right here in the middle coming up March 3rd, 2 to 4 p.m. And that's a Tuesday. And what you can do, you can go here, you can go simplertrading.com/try. So go click that link. I'm going to go to that next. And this is where you can sign up for my mastery service, as we call it. It's basically my alert service. And that's where you can go out there and, I do the videos once a week. We get live trading once a month. And then we also, I communicate and I tell people exactly what I'm doing. Sorry, as I said, I'm at my buddy's house and I guess he's getting a phone call. So 30-day trial for $7. This is at the simplertrading.com/try. This is where you can kind of learn more about me, sign up. 30 days, give it a shot. That way you can see the history that I've done, you can see the videos that I have, you can get in there, you can understand how I speak to people and the kind of alerts that I put out there. And usually I like to say that this is like one cost of a in and out trade, but now since we have no commissions, well, maybe it's a cup of a really expensive Starbucks latte or something. And I think that, it's pretty worthwhile to go spend 30 days, something like that, and try it out. Because when I was learning, I had to go out there and figure out, well, are you even worth it? Are you legitimate? Do you even have the trading style that resonates with me? Like, what if I sign up for a day trading thing and it just doesn't work for me and I don't like it? And so that's where I prefer and I really appreciate people services that have trials, because you don't know what you're buying until you get into it and you start figuring it out. And so that's why we have this. Now, that is pretty much the end of this, and I wanted to kind of show you some live charts since we got about 6 minutes left until my time is up. But here you go. So this is the website, simplertrading.com/try. You can read up all about it, see what I do. You can see here we got all of our dates up here, and then here you go. This is the memberships. You can sign up for the trial, get it. Yeah, Steve, I know, because there are some people who are trying to sell, get in for a month, and it's a couple $100. I'm like, man, I don't even know what you're doing over there. I don't want to spend money on something that I don't know what's behind this paywall. So $7, come on in. You can see everything I do. Come say hello. Come talk to me in my chat room and check that out. So how about this? Live charts. How's that for Moxie price trigger to the downside? Right? I mean, I can't make this stuff up. Part of the way I trade is, look, on the 15-minute time frame, price got underneath the 15-minute 50 right there. Ooh, careful, watch out below. Danger, Will Robinson. And then I talk about divergences. And so what you can see here is price up higher. Notice that the Moxie indicator went lower. And what this is telling me is that price went up higher, but it did it on less energy, less momentum. And that's what we're talking about right there. And you could just see vroom, like that. So for now, we're trying to look for a bounce, but so far I don't quite see one yet. I don't see it yet, but we're keeping an eye on. Let me show you JNUG. I'll show you the trade that we took. Okay, let me actually back this out just a little bit so we can see it a little bit more clearly. And what you can see, notice here, see how price was going level right there? And then you see how, actually let me zoom out a little bit more and we'll get this. There you go. All right, so price had been going level like that. And notice that the Moxie indicator kept trending up and up and up right there. And then you see the Moxie price trigger, boom. And then price got over the moving averages. Everything looked good. That is the kind of trade I like to take. That's what I'm looking for. And on the 15-minute, you can see price stayed over the 15-minute 50 as well. So I'm an end of day trader. This move started at the beginning of the day. And so I just said, okay, something's happening. We got to get on this thing. So jumped in right there, both feet, and then it just screamed. And it went up. You can see it continued to follow the 15-minute time frame. And then when price opened with a gap up that next morning, I communicated to my subscribers before the market opened. I said, look, guys, I think this is it. Go cash in right at the market open. Just put a market order, just say out. And this thing went 27-ish%. 26, 27%. Very, very nice. And that was just in a handful of days. Now, one of the things that I don't think a lot of people talk about is when not to be in a trade or when to know how to not be in a trade. So let me show you Target. And then I'll show you a couple others that are very, very interesting. The Moxie indicator does a really good job of telling you when you should not be in a trade, or if you want to take a short, it's going to be a juicy short. Yes, so Ted, you do have to have Thinkorswim in order to use the Moxie. Well, you have to have Thinkorswim in order to use my indicator, but if you want to buy my indicator, that's a different thing. You can go to simplertrading.com/stocks, and that's where you can find me. The mastery service is just my alert service. This is my trading service. So no, you do not have to have Thinkorswim in order to follow my trades. I show you when I put out trades, I put out my screenshot so you guys can actually see what I'm looking at and you can interpret the way I do. So for example, if I'm trading target, notice here, notice the Moxie price trigger to the downside. More so, notice that price was over the purple moving average, but notice that the Moxie indicator kept going down and down and down and down. And that is an inverse trampoline move. And that's telling me, Moxie is telling me that this is not good. That energy keeps going down, 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 even though price keeps going up. And then you can see right here, the short entry is when price gets underneath the moving average and just hits it. And then you can see there's a fresh short right there when price should not be over the 50 when the Moxie indicator is below 0. And then I was even guiding people here. I said, I think this is going to be another short because price is underneath the daily 50 and the daily Moxie indicator is below 0. And yeah, so as far as the mastery, you don't need Thinkorswim. If you want to buy the indicator and buy the class, then yeah, you need Thinkorswim because this is how I designed it, was over there. How about this one? Crowd, CRWD. Well, my main moving average is the 50. That's my bread and butter that I like to trade. Now notice this one. See how price on CrowdStrike kept going up in that direction? You see how the Moxie indicator was basically flat like that? You see how there's a divergence? Price kept going up and up and up, but you see how energy was not doing anything except just going flat? That was telling me that this is something not to be in, that you should not be into this because it's like this is a false entry. This is not being supported. And lo and behold, there's your Moxie price trigger and price just fell. Totally got crunched. And then SDC is basically the same thing. You'll notice much similarities. And remember, guys, I come from engineering, mechanical engineering. I like to see things that are very black and white and cut and dry. Notice the same thing. See how price tried going up? Notice how dead the Moxie indicator was. And that was telling me like, nope, this was not a good trade to be in. Do not take a long, do not get suckered into something like this. Perhaps if you want to take a short, that's up to you. But this is how the Moxie indicator and my method tells you don't be in. Don't be in something like that. All right, let me see what's going on in some of these questions. Some of these are paragraphs. Okay. Well, right now I'm on the daily and hourly time frame. Daily on the left, hourly on the right. Let's see, criterion on a chart showing red color only inflection point area, but Moxie chart at bottom has both red and green. Well, I'm not entirely sure. Quick question on that, but when you see something like this that is red, green, red, green, red, green, what that's telling you is that there's no momentum. There's an up day, there's a down day, there's up momentum, there's down momentum, there's positive, there's negative. That's telling you that's not good. But then if you're trying to ask me about something like this, the green says that the one day from the next day or the next period went higher, higher, higher on more and more momentum to the upside. And then you get a pullback, momentum here went down a little bit, that's the red. And then you get more momentum to the upside, and then you get a little pullback, a little bit less momentum, and then more momentum. And the way that I explain this is that here's your 0 line. This is positive energy, this is negative energy, and the height of the Moxie indicator above 0 is how much gas you have in the tank. So think about it as a gas tank. And when you look at this, you can see that as price keeps going up, you're getting more and more gas in the tank. So you're getting more and more energy. But then suddenly something changes right here. You see how price goes flat? Now you're running out of gas. And then you hit 0, you hit empty. So now you're out of gasoline, you're out of energy, you're out of gas, you're neutral. But look, price or your vehicle keeps trying to go up the road. So that doesn't work. If price keeps trying to go up, but the Moxie indicator's like this, it's like, doesn't work. Great, thank you, everyone.
And I want to thank everybody for being here. I've never heard the last presenter present simple trading, and it has some very good, that whole divergence thing with price and momentum. I use RSI. He has apparently his own indicator. That's a very, very reliable indicator, and I really enjoyed his presentation. So although I don't know him personally, I've heard a lot of good things about him, and so you know, you may want to take a second look at his, because I do think when your basis is the momentum price divergence, you're coming really from a very strong spot to begin with, and seems to be a lot of what he's about. So I know I'll be taking a look at deeper on his stuff, as maybe partnerships with him, but because I'm in the area of the mental and emotional issues, and I think that in Michael's presentation, I think his name is Michael, or Jay, or I'm sorry, I didn't get his name, but because I came in the middle of the presentation, but he mentioned something about an area where he got a little dicey and he really had to follow his rules. And because he did, he was there for the big takeoff and bought his mother a marble countertop. It's that area. This is the area, that area where you're not quite together, and you start feeling the pressure of the market going down against you, and the market spending time in that area, and you're wondering if the signal that you were given is really good anymore. That becomes an issue, and most traders, and I'm going to say in the 80–90% are going to jump out of a trade like that, because most of the traders are not disciplined, which is why most traders lose. So and they lose because of fear, and I'm going to cover that today with you, so that you have a little bit of better handle, and in the end, I'm going to show you something you may want to take advantage of, and you'll have a great handle on what it's all about as far as trading, and in this particular case, a trader's fears and how to eliminate them. That's my wife, who's our subconscious trainer. We work with the mind, and we help you in different ways. She has different modalities that she uses when she works one-on-one with traders. And in our other courses that are online, everything, all the content is supplied by Tisha. That's at our anniversary last year. This is just a little bit about me. If you don't know, I'll do this quickly. I've written several books and done videos. I've talked for Traders Expo. I've been in this almost 40 years now. And so it's important that you understand that I've pretty much seen it all. I worked for Payne Weber for a while, only for a couple of years. I felt it was more of a place where people were just getting on the phone and just trying to sell people things that were high commission. And made money for Payne Weber, even though that's not so bad, because they were good recommendations. It's just at that time the commissions that were being charged 30 years ago or 25 years ago were extraordinary, and kind of got in the way of profit. I was with them a couple of years, learned a lot, and so on. But before that, I worked with the International Trading Group, which was the largest option firm in the country at the time, before exchange traded option. This was in the 80s. I ran their home office. I had about 60 brokers under me, and that was a very productive time in options. But left them after 8 years, went to formed the Hallett Group, where I managed money as a CTA, commodity trading advisor, for several years, large accounts and so on, several $1 million, and my earnings was based on a percentage of what I made. And I did my clearing through my own IB, in introducing broker the Hallett Commodities. I guess I couldn't figure out a better name than my last name. I guess I was a little bit of an egotist then. So I named it all after me. But I've had a lot of experience in this as a trader, as a manager, and so on. I know the business. And for the last almost 15 years now, I've focused on mental and emotional issues of traders, because I'm married to one of the greatest, world's greatest subconscious trainers. And she did it for me. She helped me with the way I think, in very simple 7-minute sessions I'd have with her that we put on MP3s now, that are available to everybody in any of our courses, mostly because I want everybody to take advantage of relaxing and quieting their minds before they start to trade, and put in the good input that you need as a trader. This is a little bit more about Tisha. She's got 25 years of private practice experience, and the last 13 years been working with me at the Disciplined Trader. And it's been really terrific. She's produced 9 different titles. Right here on the left, on the bottom left, you'll see Trading Mind software, which one of our big products. It was the second biggest product. Actually, third biggest product. Our biggest product was Golf Mind software for golfers, and we had 2 versions of that. All these were all meditations that put positive stuff in your mind while you're relaxing. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does, so on and so forth. And we hit many things. Again, this was the beginning of Subconscious Training Corporation. The last 10 years, we focused specifically on helping traders, because that's been my love all this time. And I think traders need more help pretty much than anybody else. I mean, if a guy has a bad golf game, what's the difference? Just have a bad day. But if you can't follow your trading plan, you're going to have much more than a bad day. Tish has lectured in many, many different cities. I've listed a few of them there. She's graced the cover of many institutional magazines, etc., over her career. So we're a team that, my experience in trading, Tish's experience in making sure that trading gets into your head is really where it's at, and for traders. And the difference between traders who don't make money and do make money, I believe, are ones that have a decent system. You don't even have to have a great system. Look, the presenter before me talked about 62 or 63% wins, and that's terrific. That's actually a very high percentage of wins. But if you have 3 or 4 losses in a row, all of a sudden you may not be there for the one win, and so you start playing. Your mind starts playing games with you. Got to get out of that. Here is this is me on steroids. Now this is just a face I found online that indicates one thing really, and that's fear, because everything that a trader deals with seems to be based in some sort of fear. And I'm going to go through a little bit of that right now. Fear, as far as I'm concerned, there's no greater enemy to the trader. Fear is arguably the root of all trading activities detrimental to profitability, and not your trading plan. In other words, you can have just a decent trading plan, and if you have strong discipline to run that trading plan, you're going to make money. One follows the other. But if you are controlled by fear, that is the root of all trading activities that are detrimental to your profitability, and it's not your trading plan. And I emphasize that because most traders, we can be egotists. I think we all have, you gotta, it's a lonely business. You're sitting in a room, and if you're not pumping yourself up mentally, if you're not saying to yourself, I can do this, this is for me, I belong here, I feel good about this, I know my future is bright. If you can't say those things to you when you're by yourself, and you're by yourself most of the time, things are going to start to fall apart with it. And I think that you may have seen that in certain aspects of your trading, and you may still be in that rotating wheel that you can't seem to get out of. But you got to get out of the fear. Okay, here are some ways that fear rears its ugly head in many forms. And the last time I did this presentation, I realized that, which was a couple of days ago, I realized that everything I'm about to list is interrelated. Fear of losing in the trade. Fear of losing, that's a basic fear. We don't want to lose. I'm going to mention that a little bit later too. Fear of pulling the trigger. Well, if you are fearing losing, then you're going to fear pulling the trigger, okay? And if you fear of missing out on a trade, if you're losing, you want to take the next trade because maybe you're revenge trading, but there's a fear of missing out on a trade that may get it back, so you take it for revenge trading, not because your trading system told you it was an A+ trade. Maybe you got 2 or 3 of the 4 or 5 indicators that you need and lined up to make it happen for yourself to take a trade, and because you're looking to get back the loss that you just made because you make a stupid mistake, then you're revenge trading, and we see a lot of that in our coaching. Okay, fear of having your stop hit. Well, if you just lost 2 or 3 trades, or you just had your stop hit in your last trade and the market went up without you, somehow you think it's going to happen again because it's just happened. Well, that's not necessarily what happens. Fear of having your stop hit is an issue, and what happens is you're going to move your stop the next time because you don't want it to happen again, and of course that leads to the big drawdown that you didn't plan for, and the gut punch, which takes away all your positive attitude, and you know what happens after that. Fear of turning a winning trade into a losing trade. We see a lot of this recently in our laser coaching program. that I'm going to show you a little bit about later, but the fear of turning a winning trade into a losing trade causes you to take a profit way before your target. And I think that the previous presenter in Simple Trading talked about taking profit at certain intervals, and that's one of the solutions that you can do to help yourself. Is when you see that first move in the market in your direction, take a little bit out this way, and maybe move your stops to a break even. This way, you're locking in a profit, and you can allow the remainder of your stop or of your position to hit your target. Fear of not making it as a trader, that becomes the root problem. I mean, if you start the fear of losing and you're not pulling the trigger and you're chasing trades and you're moving your stop around and you're turning and you're taking profits before their time, you know, you start to say, if this, you know, you keep losing, and you say to yourself, you know, is this for me? Am I going to make it as a trader? That becomes a base fear, and this is where real problems come in. If you cannot believe that this is for you, all of these fears are very easily they pop up again and again, because your base level where you're talking about self-esteem and self-confidence, this is what happens when you start fearing if you're going to make it as a trader. And of course, there is fear of disrupting your life. You can, you know, traders who are trading more money than they should, traders who are counting on speculative profits to pay bills that must be paid this month. These are things that can cause fear and disrupt parts of your life. Okay, here it's all wrapped up in this, and I want to give you a quote. This is my wife mentioned this to me the other day on Monday, and I said, just say that to me slowly, because I want to read that to people. She said that the most common fear of traders is the fear of losing money. The human condition is that we hold on to money and we don't want to lose it. The fear is long and deep. And at that point, she took a sidebar and said to me that, you know, when you're a child and you're given money, you're given a quarter or a dollar, you really hold on to that money and you really don't want to lose it. The fear of losing money is long and deep. We're also conditioned to go to work and make money. So when a trader trades and has a series of losing trades, it has a big drawdown. Number one, it's mentally and emotionally painful. And two, it can become what's called anticipatory anxiety. Anticipatory, in other words, a fear of it happening again. This leads to hesitation, doubt, and the unwillingness to follow your trading plan, which causes more anxiety. So this statement is really all there is when it comes to encapsulating the idea of fear and the trader. This is why 90% of traders lose money, not because of their trading plan, because their inability to follow their trading plan, because of spiraling fear in whatever area that you're fearful in, which is all based on the fear of losing money. Okay, but here's the good news. We've developed an extremely simple, effective two-step strategy. I'm going to show you that strategy right now to replace debilitating fears with behaviors that serve you as a trader, so that you can stay in your trading plan and succeed as a profitable trader. So the two-step process involves separating the thought of a problem with the fear that's attached to it. And then once you've separated and dissipated the thought from the fear, the thought from the emotion, which in this case we're discussing fear, which is the root cause of all the emotional problems with traders. Once you separate that, then each one dissipates. And here's what I mean by that. Thoughts and emotions are married. Okay, we need to, in step one, we're clearing the fears. The stronger the thought, the stronger the emotion. The stronger the emotion, the stronger the thought. These two things, thoughts and emotions, are inseparable. If you can separate them, if you can separate the thought from the emotion, if you can bring the emotion down, the thought will dissipate. Okay, which is the way you want to do this. Okay, so when you separate the thought from the emotion, both will dissipate. We use something called EFT, Emotional Freedom Technique, to do that. And we do that one-on-one with you right on the computer. Emotional freedom technique is a derivative of something called thought field therapy, which occurred before. Somebody took the more complicated version of this idea and the scientific proven idea now, and streamlined it to make it what they call EFT, emotional freedom technique. It is the Eastern and Western science of separating emotions and thought. And if you look here at all these points, these are acupressure points, very well known. These are main acupressure points. There's also one under the arm here, under the nose, under the chin, under each eye, the temple area, right at the edge of the eyebrows, top of the head. If you use your hand and with your fingertips and tap on these points in a specific series of rotation around the points in a specific order, and say and repeat orally certain things that you are fearful about, and then the release of those fears, you can release the emotion from the fear. These are energy points. And when you're I don't want to go into the science of it, except for to say that this is the same science that they use in acupuncture, where you're releasing the energy, and we're doing it in this case through tapping and alerting that energy center to the thought that you're giving it, which when you're saying something, you're holding that thought in your mind. So you're identifying that energy center with the thought, and as you're tapping, and when you say certain things, then it starts to separate the thought from the emotion. And this doesn't take long. This is this only takes sometimes 3 or 4 minutes when we do it online. In other words, you see me, I see you, or Tisha sees you, and you see Tisha, and she shows you where to tap. She can see where you're tapping, and within a 5-minute period, 4 or 5 minutes, what used to be a 10 from a 1 to 10 scale of some emotion about losing money or not having the confidence to take a trade, all of a sudden within 5 minutes goes down to a 2 or a 3. And if she doesn't get it down to a 1 or a 2 or 3, and therefore she'll go another round of tapping with you that will get it down. It's an amazing process that separates thought from emotion. Once you separate thought from emotion, what happens is after that 5-minute period, many times Tisha will ask, how do you feel right now about the thought? And you can't even come up with the thought. You not only do you alleviate the fear, but the thought of the fear doesn't come up. Okay, so you're separating the emotion from the thought, that releases the emotion. All of a sudden, the fear is gone. But now what? Okay, now you're still being directed by everything around you, which could reinstitute those fears to a large degree. Okay, so the next step, step 1 is using EFT to separate the thought from the emotion. Step 2, we do it through subconscious training. Okay, introducing beneficial behavior. What you're looking at here is our neural pathways. These thin lines are neural pathways that lead to a neural net. This is your brain, okay? And in the what happens is when you drop down into an alpha brainwave state, and you do that when you watch TV, when you're driving long distances, you have thoughts and so on. But if you can take a few deep breaths and relax, you can start to and think of certain things. In other words, in a meditation, it gets you into a light meditational state. These are 7-minute things that we do, 7-minute recordings that we've made that you take right online. And what happens is you through a few deep breaths, sitting in your chair or lying down, whatever you want to do, you get into an alpha brainwave state, and you listen to the suggestions that say, I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. I understand that my trading plan is where I will be successful. If I follow my trading plan in the long term, I will be a successful trader. When my trading plan tells me to take a trade, I will take it without hesitation. I'm a wise and disciplined trader, and I do the things that I'm giving you pieces of some of these different separate meditations that we have covering all sorts of areas of fear. And every time you do this, you're creating one of these lines, one of these neural pathways. And the neural pathway is carrying the energy, the idea, the thought that you're a wise and disciplined trader, and you do the things that a wise and disciplined trader does, and you pull the trigger without hesitation. And if you do that once a day for a couple of weeks, you're going to get 10 or 15 of these neural pathways all carrying the same message. And if you have enough of them, it gathers into a neural net. This neural net is your subconscious neural net, and your decisions are controlled by what your subconscious believes is true for you. Once this neural net is built and it becomes the predominant neural net, when a stimulus happens, like your trading plan tells you to take a trade, you're no longer operating by I'm scared, I've lost so many, because now you're operating, I'm a wise and disciplined trader, and I take the trade when my trading plan gives it to me, because you've built a neural net that now carries the behavior of a trader that's beneficial to a trader. I hope I made that clear. So a thought creates a neural pathway. By slipping into an alpha brainwave state, you can direct specific thoughts, create specific neural pathways. Enough neural pathways create a neural net. So this is what this is our process, and this is what we are changing traders' lives doing this. Okay, we start with separating the thought from the fear to clear that. And we use EFT to do that. Then we come right back with having you, after our one-on-one session, we have you come back with doing these meditations once a day for a week, or whatever Tisha assigns you as far as building that new neural pathway. Very easy. There's no work on your part other than to understand the principles and the science behind it, and then just do the work. Work meaning repeat what Tisha tells you to repeat, and tap where Tisha tells you to tap when it comes to releasing the thought from the emotion, and then take the training and sit there and relax. It's the easiest work you'll ever do, because you'll be closing your eyes and you'll be listening to somebody, my wife's voice, instilling positive behavior. And this is what we do, and this is what we're famous for, okay? So at the point where the last presenter talked about where it was hairy for him, and this is, you know, he's had enough grit to get through it. Most traders don't, and I'm saying to you that this is where we come in to allow you to have the discipline and the power and the inner power and the right things in your mind, behavioral things, to make sure that you understand that you are in control, and you're going to let your trading plan work for you. Okay. So step 2, introduce beneficial behavior. Tisha says about this that your subconscious mind is responsible for carrying out your habits and behaviors automatically. To change your behavior, you must influence your subconscious mind to go in the direction of your desired outcome. I think we've explained that in that step 2 for you, where you're dropping into an alpha brainwave state and getting meditational benefits from that. Okay, so my question to you is, what is your primary thought or emotion that has you trade in a way that compromises or hampers you? What is the thought or emotion that's getting in your way of trading? And I'm going to look at the chat area here and see if anybody can give me a couple of maybe I put it in the questions area, but a fear of loss. You know, that's, thank you for listening. And even if you didn't listen, you probably would have come up with that. There's fear, and so it sounds to me like I'm in the right topic here. Exit too early. All of these fears are handled. All these things are handled. Right before this, I got on, Tisha just solved somebody's solution with the exiting too early, because that can really be a killer to your ego, especially when the trade takes off without you the way you had predicted that it would. Should he move my stop? You know, that's a question. It's not a question, should I move my stop, to be asking yourself in the middle of a trade. You should have a process to move your stop, if you move your stop, and it usually should be from a loss from the initial trade to a break even, or something on that order. You're never increasing your risk by moving your stop. That I've never seen work in anything. So appreciate the smiling face, RO. Okay, let's continue now, because this is important stuff, and we're offering you unlimited one-on-one coaching sessions for a year, and I'm going to leave that up there because people don't believe me. One-on-one coaching sessions for a year, and you can have as many of them as you want. That's what we're offering, and that's why we fill fast every time we open the door for new people, of which we've just opened the door, and we're almost, I won't say we're almost, it sounds like I'm selling it. You're going to know whether this is for you or not. We'll fill, but will we fill it for you? This is called laser coaching. It's personalized mental and emotional management for traders. Okay, laser coaching. They are 15-minute one-on-one coaching sessions that emphasize focus. Okay, if you only had 15 minutes to be coached up, and to have the EFT session, then what happens is you need to get that, you know, how's the pet? It's the same gentleman that we were working with right before I got on this call had a cat that had a leg amputated from cancer. So you can't help yourself. How's the cat? Cat is great. Hey, that's great. Took about 60 seconds. That's the end of the conversation, because now we got to get down to business is what we're here for. Now, the first session in this laser coaching session is 30 minutes, because in that first session, what we do is we ask certain questions to you so that we can prioritize your issues. Okay, it's to say your fear of losing is one thing, but when we question you, it may be based on something else, that you've blown out so many accounts that you're afraid to put in more money or whatever, or it may be something base where your issue may be self-confidence, self-esteem. She will prioritize your issues. Everybody's got more than one. Okay, and so in that first 30-minute session, we will eliminate that first issue, separate that emotion from the thought, and then give you an assigned subconscious training to do on your own. Once you do those trainings, it may take you a few days, may take you a couple days, may take you a week. Once you're done, make the next appointment. You can make as many appointments as you want, okay? We isolate your predominant behavioral issue in that first 30-minute session, then prioritize them in order of importance, okay? This is Tisha. She's a beauty, isn't she? This is Tisha with Chris. Chris is one of our first coaching clients on this laser coaching. Now, we've been doing the expensive kind of coaching, the thousands of dollars coaching privately for years. We've never advertised, and you won't see it anywhere online, but people who have bugged us and have some of our other products, we've been doing it. So we know how to do this. But this laser coaching, I said, how can we coach somebody for a year? How can we be there when they need it? How, you know, you rid somebody's fears now and you make them confident, and then we disappear, and then 6 months later or 3 months later, they're beaten down by CNN or Fox or whoever's giving them information or a couple of bad recommendations, and all of a sudden those fears come back. What happens then? We want to be with you for years. What happens now? You make another appointment. That's what happens. We are there to back you up for a full year, okay? Because once you realize, because every time you get cleared, and every time you try to reinvent the fear, it's harder and harder to do when you have more successes in between. We want to be there for a whole year for you, okay? And so this is a picture of an actual session where Tisha is instructing where to tap to Chris. And I chose a picture of Chris, a moment in that we record, incidentally, all of these sessions, 15-minute sessions, and you get the recording right after the session so that you can tap. Tisha may have you do some tapping on your own with the recording so you can follow her on the recording just like she's there live, okay? But there's Chris right after his, he has a quote for you in a second, but he's very happy, of course. I didn't want to show you where he was crying in the beginning. He wasn't crying in the beginning. I was crying in the beginning. Listen to his story. Again, unlimited sessions, you get a timely and immediate support. In other words, you don't have to wait a week or a month if you have an issue or something's popped up. Make the appointment the next day, okay? The laser coaching process gives you fast results for your most pressing issues first, leaving plenty of time to work on other issues that are holding you back while developing positive habits to replace the former destructive habits, okay? It's delivered to you we use Zoom. You've probably heard of that platform. It's online one-on-one. It allows you to access the laser coaching session. You can do it on your computer, your laptop. I'm doing a business deal with somebody in Dubai right now, and we use Zoom, and I was doing it on my smartphone. I got the Zoom app, and it was just as good as doing it on the computer. So you can take these laser coaching sessions in a Starbucks, as long as people are not wondering why you're tapping yourself. But you probably want to do it privately. My point is that you can take it from any of the computer, laptop, or whatever. So very, very convenient. Again, Tisha's toolbox, we use these cutting edge therapy. Again, thought field therapy, we use the streamline technique for your emotional freedom technique. Although there are some cases, and there was one last week where Tisha, because she was trained in the full complement of tapping, there was one specific thing that this trader had that was actually had nothing to do with trading, but felt it was affecting his trading, we went ahead and cleared that using some of the tapping points for thought field therapy. So whatever's in her toolbox, she'll use. NLP, you all know that with Tony Robbins. She was one of the original ones trained by Tony. So was I, incidentally. This was 25 years ago with Tony. When he was a little boy, he trained us. And but I have not actually seen her use neurolinguistic programming in any of the sessions in the last couple of months that we've been doing the 15-minute sessions. But it's there if you need it. And of course, the subconscious trainings are what we're famous for, and we have a load of those. So here's the program: unlimited 15-minute sessions for a year, okay, with email access to us in between. Now, if you want help on your trading plan, that's really not what this is about. However, I can't help myself if somebody has a question about you know, how to move a stop, or you know, certain things that they're having trouble with to manage their. See, you got to manage your risk. That's a big part of fear. And if I can help you in that, and you ask me a question about that, I will answer it. I've not said no to anybody who's answered a question, even though I told them don't ask those kinds of. I can't help myself. So listen, if you commit to being a better trader by being a more disciplined trader, and you've finally come to the realization that you're losing because you can't control yourself the way you should, and that you control yourself 90% of the time, but that one time takes it all back and more, then I want to be there to help you, and Tisha wants to be there to help you. After each coaching session, you're going to receive the recording and the notes. Anything that I felt was important during that, I'll write it down. And also, so you're going to take your session, you're going to do your assignment, and that assignment, or maybe doing some more tapping with the recording, or doing, most of the time it's just doing some of the behavioral input stuff, like the meditational 7-minute meditations we've designed for you. So 7 minutes a day. This is not, you know, this is not like, I'm not asking you to do rocket science. This is enjoyable homework. And then book your next session, okay? And again, the first session is 30 minutes, okay? There's no risk for you. I want you to take the first session without any. Here's the guarantee: if after your first 30-minute coaching session you don't believe that this program is for you, we will happily and immediately refund your money. So that first session, remember, we're going to identify in priority your issues that are going to be mostly around fear, okay? And then we're going to clear that predominant fear, the one at the top of the list, right in that 30-minute session. And if you don't think that did anything for you, or you don't see the value of the crazy price that I'm going to give you to be coaching with us for a full year, then say, this is not for me, and we will refund your money. It has not happened yet, and it may never happen. But if it does happen, believe me, I have no problem giving the money back, because again, we don't want to be helping somebody who doesn't want to be helped, or doesn't feel we can help them. Either way, it's not going to be on you. It's about us not getting through, and I understand that if that was the case. So if after the 30 minutes of coaching you don't believe the program's for you, we'll happily refund your money, okay? I've got to give you some bonuses. I've got to give you this bonus because all those subconscious trainings are within the Disciplined Trader Mastery Program, so I might as well give it all to you. There's a lot in this. We charged $49 a month. I multiplied it by 12. That's what gave me $588. This course used to sell for $1,997 when it was in software form. It was 12 CDs. It has a basic series, and which really just instructs you a lot on money management, how to build a trading plan, how to journal, and how to run your trading as a business. Those are the 4 areas of the basic. We added that about 5 years ago because we were training traders to be disciplined to lousy trading plans with lousy money management schemes. So we built, I put in the basic series. The core modules are where you get those subconscious trainings and a lot of supportive information about it so that you understand why it works so well and why scientifically it's something you should be starting yesterday. The Disciplined Trader Lifestyle section, you remember all those softwares I showed you, the 9 softwares? What happens with our clients in trading is that, let's say we train them in patience. And they all of a sudden they have patience to wait for the A trade. A lot of traders are too anxious to get into a trade. You got to relax. You got to be patient. When you're relaxed and you're patient in trading, all of a sudden they were realizing that they were more relaxed with their kids. They were more relaxed with their wife. They were more relaxed with standing in line at the supermarket. They said, you know, could this be because of the training? Yes. So we decided, hey, we're going to give you all of the sessions and all of it, whether you're a golfer, a tennis player, an entrepreneur, a sales mind software is still being sold. We put all the sessions in this course. You have access to them for any other part of your life. We call it the Disciplined Trader lifestyle, now that you realize how subconscious trainings can help you. 4-minute drills, many of you may know me. I did over 200 4-minute drills on a 4-year period. Every Saturday I did a new one. They're really kind of motivational things. You can find them online if you Google it, but we have it all for you in one place, so you don't have to run around on specific topics. And we have bonus with the bonus material. I will say 99 ways. There's one bonus I want to mention, and that's 99 ways of journaling. People don't journal. You need to journal, even if it's just 2 minutes a day. And so I asked our customers at the time, about 5 years ago, show me the way you're journaling. Give me a few, tell me how you journal. I took 99 ways, actually it's 92 ways of that journaling, and I put it in a report. You've got that report. If you don't know how to journal and you want some examples, you can't come to me and say I didn't give you some examples. One of those will fit your style. Okay, and I'm not talking about monitoring your trades and writing. I don't journal like that. I journal like a diary, but you'll see 92 different ways. And I'm going to give you our simple trading plans. These are simple trading plans that fit on one piece of paper. They're trading plans that I have used independently and I've used in combination. And I'm giving all of those plus a fourth that I added about almost a year ago now, that actually recently has better results than even the top 3. You're going to read these, and you're going to this blue here, right here, the top is the entrance rules, exit rules, the pros and cons of the plan, and then some pictures of the triggers. These trading plans can be used independently or, again, incorporated in what you're doing right now. And so is number 4. Number 4 is called Loaded Gun. Trading plan 1, Big Move Potential, and trading plan 3, the Extremes plan, both caught, and the Loaded Gun, all caught this downward move on the daily chart of the S&P. And I think that there were a lot of, I'm kind of bragging here, but it's not hard not to catch that move with a lot of different plans, but we had 3 of the 4 that caught that plan. The continuation plan is not about looking for extremes or big moves. It's about getting in after a correction in an existing trend and getting back into that trend and not fearing that it's just a reversal of the trend. That's what the continuation plan is about. Anyway, you get all my simple trading plans as a bonus. So here's some things that people have said. Thank you for your professionalism during the year. You provided the best checkups from the neck up. These are things that people have said over the years. This is somebody that commented in the simple trading plans. Thank you from the depths and heights. The techniques for giving positive momentum and going simple and effective. That's Bill said that to you. Look, and there's 2 I need to show you specifically. These just came in this week. I just cropped out I blocked out the name. This is from Mansour, who just had his first session with us. He's on the 13th this week. So this was done on the 12th or 13th. We did on the 12th. I think he wrote this the next day, the 13th. Just a short note to say thanks and express my gratitude to Tisha and you for an immersive and very helpful first session. I already feel lighter, and it has rekindled my hope, a hope in me that I could go to the next level in my trading endeavor and in life in general. This says everything that I've just said in one sentence. Rekindle the hope. You know, again, self-esteem, self-confidence, this is an issue. So rekindling the hope. And when you can do that for a trader in one session, I have the goosebumps. I get the goosebumps every time I read this. I'm getting them now. I could even get choked up like I am right now. And to go to the next show, everybody has a dream of being an independent trader. This guy can do it. This guy has the capability of doing it, and he was getting in his own way. With one session, this guy has jumped onto the right track, and he is on your way. And this one just came in yesterday. It says today, but I clipped it off yesterday. I recently started working with Norman and Tisha in their laser coaching program to help me be a better trader and person through changing some habits that could cause me not to be at my best. Their caring and dedication to helping you get there is very evident, and slowly I'm starting to see a difference in myself since this is only the first month. and that is amazing. I can't wait to see what the year holds for me. I'm really glad to have met them, and I am better for it. Lovely people to work with. Keep up the great work. That was to me. And I appreciate, you know, he's probably had, now this is a person that's been doing it every week. He's been making an appointment every week. He kind of owns Tuesday, even though he'll be today, 2 o'clock, we're working again with Todd. He takes Tuesday or Thursday at 2 o'clock. What'll happen is when you're on this program, we're going to send you a link. It has a calendar like Open Table where you can just, make your appointment. But Todd is great. He trades a nice size account, big account. But I'm telling you that this guy also has the capability of making millions. That's what I think about Todd. Anyway, the exclusive offer, here it is. I'm running out of time, so let me just wrap it up in 60 seconds here. 15-minute coaching sessions, an unlimited number for a year. I just gave it a value. What are you going to value it at? Most coaches at $5,000. I figure I'll go $3,900. Access to the Discipline Trader Mastery Program, where all the subconscious trainings and all the other stuff I mentioned, and of course the 4 simple trading plans. If you add it all up, it's a very reasonable $5,379. But for you right now, I think it says 10 here. It's $997 for a year of coaching, unlimited. Limited is 10. It's not 10. It's 4 right now, because this presentation that I'm doing was made 2 days ago, and we had 6 people take the spot. So there were 4 left before this training that I'm doing today. So here's the link: thedisciplinetrader.com, get laser. So if Anna, if you could type that in, thedisciplinetrader.com, get laser, so people have it, or take a look. Here's where you wind up when you go to that link. This is the shopping cart. I'm sending you directly to the shopping cart because I don't know how much more I can explain this. There's nothing much really to go over. I've kind of over-explained it. It shows you the unlimited 15-minute coaching sessions for a year, Discipline Trader program access. So it's all here. It's $997. You can pay any way you want, and you're going to wind up paying $997. And remember the no risk guarantee. If you don't like it after our first 30-minute session, you'll get your money back. I really, really hope that you take advantage of this. I know I'm out of time, but I did start a couple of seconds late. So maybe one question. I don't know. Do we have anybody that has a question that you may want to ask? And I will be glad to answer any question that you have. Otherwise, please take advantage of this while the spots remain. We only take on about a dozen at a time, and then we close it down. Make sure that we can work with the people, because some people like it to do it every month. Some people do like to do it every week. Some people even more or less. So we need to listen. We don't want to spend all our living days coaching people. We love to do it, but there's got to be a limit on how much time we can spend doing it. So we only allow a dozen at a time. And so out of this 10 that actually became a dozen, I added 2. There are 2 left. So please do take advantage. I appreciate the opportunity to present this and to describe to traders what really is the most important thing about trading, and that's getting you together, because there are a lot of different trading plans that can operate if you operate ideally. So thanks again, Anna. I appreciate the opportunity.
Hey, Steve. Hey, Manuel. Hey, Peter. Thank you so much for the confirmation. Truly appreciate it. Hey, Terrence. Hey, Augustine. So I have about 40 minutes with you. And so because of that, I just want to get right into it, and I want to go right into a strategy demonstration. And so in front of you is the risk disclaimer. It just means there's risk involved. You should never invest money you cannot afford to lose. Always keep risk management in mind. Understand that we're not CTAs, or stands for Commodity Trading Advisors. And what that basically means is that what I'm going to share with you is research, and what you do with this information is completely up to you. Now, the research that I want to go ahead and start out with is going to be, and basically we just kind of focus on the end goal in mind. I think we're all here trying to identify a strategy that could realistically and potentially help you become better as an investor, better as a trader, better at recognizing opportunities. And so what I want to do is start with the end goal in mind, which is basically what could a strategy potentially do for you? And in front of you, what you're going to see is some stats and some results from January 1st, 2019 until today, February 27th, 2020. Now, the strategy that I'm going to introduce to you took literally about 40 plus years of combined experience to be able to combine a diversification entry strategy with a pattern recognition exit strategy that has a strike rate, which basically the pattern repeats itself upwards of 8 out of 10 to 9 out of 10 times. And what we did is we took our approach and our strategy. We went to NinjaTrader, which is a charting software. We pulled the broker data feed, and we ran our strategy candlestick by candlestick by candlestick from January 1st until today. And what we have is we have a total of 968 trades, and 85.95% of the trades generated a profit or made more than what they would have lost. Now, of the 968 trades, 136 of them lost. Now, the average monthly profit opportunity is $10,986.87. So before we go any further, let me just ask the simple question, which is, if you focus in on the end goal in mind, type in a me, M-E, into the question section box. If an extra $10,986 a month would make basically a financial difference in your life. What if you were able to do half of that? What if you were able to do just $2,000 or $3,000 of that? But for those of you who are actively trading, what I want to do is share with you the win ratio, which is 85.95% currently from January 1st, January 1st, 2019 till today. Now, what that looks like in regards to an overall chart, it looks like this. It makes money over time. And what I mean by that is the strategy I'm going to share with you doesn't win everything. It does have losing trades, and I want to be very transparent with that. But in regards to the trade-by-trade summary, all the data and all the statistics that we have are right here in front of you. We have literally every entry time stamped, every exit time stamped, every position buying or selling, the overall profit opportunity, and so on and so forth. And so with that being said, let's just go ahead and jump right into it. I have a basic introduction to share with you and to show you, and then we're going to go right into the live market, okay? So in front of you is just a basic chart. What I'm going to be doing is showing you the strategy inside of what's called the futures market. Now, quick question. How many of you currently trade futures? If you know how to trade futures, type in futures. If you're brand new to trading futures, or if you've never traded futures before, type in new, N-E-W. Just kind of want to see the mix up of the room. We got over 100 people here. Just kind of want to see who's actually in the room. Okay, so Trader trades futures, Krashad trades futures, Steve is brand new, Ted's brand new. Okay. Well, first of all, welcome, and I appreciate the opportunity of being here. I think this is phenomenal when a group of highly talented individuals are able to share their knowledge and share their experience and share their research with people who want to learn. Klasan's new. Well, just understand that in trading, specifically the futures market, it's a very straightforward market. The market can go up and the market can go down. We look at charts just like anybody else. We measure price movement over time. Now, there's only two trading decisions that we can realistically make. We can only buy the market, we can only sell the market. What that means is we can make a financial bet. We're going to invest money and we're going to risk money, and we're going to make a bet on whether price goes up or price goes down. If we make a bet the price goes up and it goes up, we make money. If we make a bet the price goes up and it goes down, we lose money. Same thing on the opposite side when selling. If you make a financial bet the market falls and it falls, you make money. If you make a financial bet the market's going to fall and it rallies, then you lose money. So the baseline odds are 50-50. Do me a favor, type into yes, why yes into the question section box if you understand that the baseline odds of picking direction right or picking the direction wrong is a 50-50 chance. You just flip a coin and literally those are your baseline odds. So if you think about that logically, if you got a 50% chance of being right or wrong, what if you're able to use some sort of technology, some sort of strategy, some sort of pattern recognition, something that can help you be right more than half the time. And then as long as you risk $1 to make $1, in theory, you're going to generate an income. Well, the strategy that I'm going to share with you has a pretty decent performance. Now, these results come directly from NinjaTrader running our strategy through the data from February 1st, 2019 until February 1st, 2020. So a 1 year worth of data from calendar day to calendar day, okay? So on the S&P 500, only taking buy trades, utilizing what's called an E-mini contract, it's averaging $13,678 a month. If you look at the NASDAQ 100, which is a very popular symbol from February 1st, 2019 until February 1st, 2020, it's averaging $13,325.99, only taking buy trades. Not everybody likes very large gains, and because with larger gains comes larger risk. Some people do like a moderate risk, but they do like a moderate gain. Here is the Euro future, only taking sell trades, averages $3,140.35 a month from February 1st, 2019 until February 1st, 2020. So my name is Josh Martinez, and I'm a 10-plus year trading veteran. I personally taken a $500 initial deposit investment and generated over $39,000 US of profit. I'm a senior course instructor at Traders Agency. I'm a published author, international speaker, professional analyst, and I've trained tens of thousands of people from all around the world. And I'm also a full-time trader myself. What I do is I share my research. This April will be my 11th year educating and teaching people on how to make money online and techniques. And what I do is I share my research, my strategies, and my experience to people who want to learn. And some of my articles have been published in Your Trading Edge, FX Trader Magazine, Equities.com, Trading Pub, as well as TraderPlanet.com. So let's do this. Let's go ahead and jump right into the market. Let's get right into it. And literally, I have less than 30 minutes left, so let's just get right into the strategy. There's really two ways that you can trade. There's the technical way, and then there is the technology way. Okay, and so what I want to do is just share with you the basics of the technical way. So if you were to dedicate your time and learn trend lines, Fibonacci's, buy zone, sell zones, candlestick formation, high price, low prices, multi-time frames, pretty much what I did over the last 10 years. You may want to write this down. So when you technically trade, I like to use 2 time frames. I like to use a daily time frame to give direction. And then I like to use a 1 hour time frame to confirm the zone. So what we're going to see here, what we're going to notice is we're going to notice that this market is inside of an up angle. Now, one of the neat things about trading is that the market will U-turn at, on, and around very similar price points. So trend lines is usually like a mystery. Well, not so much a mystery, but you usually find trend lines to help you find the areas of U-turn. Do me a favor, type in a yes if you can visually see that the E-mini Russell 2000 on the daily time frame has an uptrend line. Anything above the uptrend line traditionally shows upward movement. Anything below the trend line, we would consider that the sell zone. Basically, what I'm saying is, does everybody see how we're hitting an uptrend line? And if this market were to do what it did the last 3 times, more than likely we're going to see what's called a bullish push. Now, if that bullish push takes place, believe it or not, that's going to be just to this previous high, 1,640 ticks. 1,640 ticks. Now, inside of the futures market, we buy and sell contracts. Now, what is a contract? Well, if you're a stock trader, you buy and sell shares. If you are a Forex trader, you buy and sell lot sizes. If you are a futures trader, you buy and sell contract. In this scenario, if we take a look at the margin requirement sheets from NinjaTrader, which is a charting software, the E-mini Russell is, if you trade during the day with NinjaTrader from 6 p.m. Eastern time to about 4 p.m. Eastern time, it's about a $500 average investment. If you were to enter in today, exit today. If you hold on to your position overnight, it's about $3,200 if you hold on to your position overnight. Now, the average tick is about 5 $5 US for every one tick of movement, which is about 10 cents worth of movement. So when we view this and we say, hey, there's 1,640 ticks of upward movement, 1,640 ticks times it by $5, that's $8,200 US worth of potential upside. So 8,200 US dollars. So here's my question before we go any further. The last time it took the market to rally and to go up 1,640 ticks, it was 47 calendar days. So basically 2 months. If this market rallies the same exact speed as it did last time, anyone who begins to buy this market or focuses on buying this market over the next 2 months could rally up and generate 8,200 US dollars or an extra $4,000 a month. Before we go any further, let's just kind of focus on the end goal in mind, and let's just pretend that you were to invest and only trade during the day. Type in a ME, M-E, into the question section box if you'd be pretty happy taking an average investment of $500, only trading during the day, and then making in return an average of $4,000 a month. So basically, you set aside $500 average investment. You strategically trade during the day from 6 p.m. to 4 p.m. Eastern time, and then within the next 30 days, you make $4,000, and then the following month you make $4,000. How many of you would say, hey, that's something I would be pretty happy with? Steve says me, Active Trader says me, Caroline says me, Peter says me, FT says me, Norman says me. Perfect. So now, the big question is, what do we think to ourselves when we see an opportunity like this? Let's just be very frank with each other. If you're learning how to trade or if you're trading now, let's just talk about the desire. How many of you in this room are saying to yourself, well, if there's $8,000 with opportunity, I would like to buy now? Type in a yes, why yes, if you kind of feel like, hey, we should look to buy now. Yeah, Steve says, yep, right. And what I'm saying here, and the reason why I point that out, is because we refer to that as the curse of knowledge. Well, the curse of knowledge is when you're empowered and you understand what the market may do next. And so you get a little bit excited and you jump into the market early. And usually when you jump into the market early, what ends up taking place is you have added risk. Maybe you get overexcited and you increase your investment size and it's just a little bit too large. And so therefore you lose, you enter into the market, it goes against you, you close out with a loss, and then eventually goes for you. A technique that you can utilize is a multi-time frame technique. Basically, what you're going to do is you're going to go to the 1 hour time frame, and you're just going to basically say 1 hour time frame confirms the zone. If the direction on the E-mini Russell says there's a potential buying opportunity, all we want to do is we want to go to a 1 hour time frame. We want to draw a downtrend line off the 1 hour time frame, and if this market breaks into the buy zone, we'll start buying the market strategically. So the market breaks the downtrend line, comes to the backside of the trend line. This is where we will start buying the market, right here. And then more than likely, we're going to see a bullish trend. So a way to view the market is you use the daily time frame, divide the market from a buy zone, sell zone. And then if the direction says up, if the daily time frame says we're going up, go to the 1 hour time frame. If the 1 hour time frame says we're in the buy zone, you buy the market. So if you're in the buy zone on the daily and you're in the buy zone on the 1 hour, you focus on buying. If you're in the buy zone on the daily and you're in the sell zone on the 1 hour, you stay out of the market. If you're in the sell zone on the daily and you're in the sell zone on the 1 hour, you sell the market. Type in a yes, why yes, so that makes a little bit of sense. Okay, so what I want to do is I want to share with you a methodology that could begin to expedite your learning curve, number one, but more importantly, that can help you focus in on the end goal in mind, which is ultimately performance, okay? And I want to share with you what we put together that has historical data that is showing us and sharing with us a win ratio of 85.95% over 968 trades, okay? which is averaging over 10,986 US dollars a month from January 1st, 2019 until today, which is February 27th, 2020. And it's specifically designed to help somebody visually identify a pattern. That's it. And then when you have a pattern, what you do is you repeat the pattern. Now, we can do this off of a 5-minute time frame. And we do this in a 5-minute time frame inside of the futures market. Now, this will work on NinjaTrader, which is a charting software. This will also work on TradingView, which is a charting software. So what I'm going to do is going right into what's called Destination Trader. And I have about 10 minutes. I have about 20 minutes remaining with each other. No, I have till 1 p.m. Eastern time. So I got about 25 minutes left. Okay, perfect. And what you're going to notice is that we have these purple dots, right? Now, these purple dots, what they do is they mark a price on your charts. Believe it or not, price has a 9 out of 10 chance of touching the purple dot. Like literally over time, the market has a 9 out of 10 chance. What I'm saying is there's a 9 out of 10 chance that this market's going to come down and touch these purple lines. Type in a yes if you understand that, because that's the pattern here. We got a 9 out of 10 chance the market's going to come down and actually hit that purple line. Okay, now, the question is, number one, I don't want you to just take my word for it. What I want to do is I want to walk you through some trades, and I want to walk you through just basically how the market reacts to these purple lines so you can see firsthand. So we're going to go back, I don't know, last week, and then we'll do our very best to bring it up to date. So essentially, what we're going to be doing here is, number one, I'm going to let you know how these are calculated. What it does is let's go ahead and bring up to a dot. Let's bring up to one that hasn't been fulfilled. And okay, here we go, bingo. So it's going to take, you may want to write this down, 120 minutes, 120 minutes, excuse me. And it's going to take the high price, the low price, it's going to take the close, and then it's going to run an algorithm. It's going to run a mathematical equation, and then it's going to forward project where price may be. So it's going to take the low and the high and the close, then it's going to run a mathematical equation, and it's going to forward project where price may go. And all we're saying here is this. Look, you got this purple dot, okay, right here. And all we're saying is there's a 9 out of 10 chance that the market's going to fall and hit that purple dot. So let's see what happens, okay? The market comes up, it goes against me, okay? The market never fulfilled, we call this a destination, but we never fulfilled this destination. We are still expecting price to fall to touch that purple dot. Bingo. Yes or no, did the market come down and then fulfill this destination? Yes or no? Okay, let's keep going. So that one's completely over with. Now, we're going to wait for a new destination to present itself. Sometimes the destinations are fulfilled within the same candlestick, so we have to wait. So once again, it's taking the formula, it's taking the high, and it's taking the low, and it's taking the close, and then what it's doing is it's forward projecting where price may go. So here's a purple dot. There's a 9 out of 10 chance the markets are going to come up and hit that purple dot. And then bingo, market rallied up. That destination's over with. Let's look for the next one. Okay? And so all we're waiting for, here's the dot right here. There's a 9 out of 10 chance the market's going to come down and hit that destination. So all we're saying is price is going to come down and hit the purple dot. Bingo, market fulfilled the destination, and then that trade's complete. Now we're going to wait for the next one. And that's really how this works. And so we wait every 120 minutes. So here's one right here. We have a destination. We're going to expect the market to rally and fulfill it. Bingo, market rallied up. Now, why is this important? Well, in trading starts, if you're going to develop a strategy, period, and you're saying, hey, I'm going to trade the markets, what you do is you try to find a strategy, or you try to find a pattern in the market that repeats itself. Why do people learn trend lines? Because it's a pattern in the market that repeats itself. Why do people learn Fibonacci's? Because it's a natural governing law of nature, and it's an equation that repeats itself in the market. Why do people use head and shoulders? Why do people use candlestick formations? Why do people use buy zone, sell zones? Because they are patterns that repeat themselves. They do require the skill for you to learn them, and it does require what's called spatial intelligence, which forces you as an individual to have to find them yourself. All this is, what I've shown you right now, is it's an equation. It takes of 120 minutes, the high, the low, the close, and it forward projects based upon the pattern recognition technology where price may go next. Type in a yes if that makes a little bit of sense. So all we're saying is, look, there's a 9 out of 10 chance the market's going to fall and touch this destination. That's it. That's all we're saying. It doesn't matter how high the market is. It doesn't matter how low the market is. All we're saying is price is going to fall towards it, okay? Now, this destination has not been fulfilled, so let's go ahead and show you what ends up happening. Bingo, market comes down. Now, the 9 out of 10, that's a pretty bold statement if you think about it. It really is, because a 9 out of 10 chance basically means it's a 90% success rate, and that's a pretty bold thing to say. Instead of me just saying, take my word for it, what I want to do is I want to literally just count all the destinations on your screen, and I'm going to show you how many have been fulfilled and how many haven't. Okay, and then we're going to talk about it. So let's just count all the purple lines. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 72, 73, 74, 75, 76, 77, 78, 79, 80, 81. So there's 81 destinations on your screen, 81 destinations. Now, of the 81 destinations, how many have not been fulfilled? Well, this one was not fulfilled, and this one was not fulfilled. All other destinations were fulfilled or considered hit. So you have 79 which are considered hits. So of the last 81 destinations, 79 divided by 81, 97.5% strike rate. What that means in layman's terms is this. This pattern and the last and this 81 pattern streak was right 97.5% of the time. Now, I want you to logically think about this for a moment. If you were to trade towards the destination, and each of those destinations were a limit and an individual trade, you would have won 79 out of 81 trades. Type in a me, M-E, into the question section box if you would be happy winning 79 or your last 81 trades. Yeah, David says me, R says me, Steve says me, Peter says me, Active Trader says me, Caroline says me, Derek says me. It just logically makes sense. Now, the challenge with this is you're going to have to control the two that didn't work, right? Because what you don't want to do is you don't want to trade blind or naked, which means unlimited risk. You don't want that. Number two, you want to have what's called an entry strategy. Now, the entry strategy is what's called a diversification entry strategy. And basically, what I want to do is I want to show you what we have done. Now, I like simple, easy, straightforward things. And what I mean by that is I don't like complication. I would like to share with you and show you a self-directed auto strategy, which basically is a piece of technology that automates everything I just showed you. And what this is right here is these are results trading the NASDAQ 100, and this is directly from NinjaTrader, which shows you what your performance could have been, okay, if you were using this starting January 1st, or excuse me, January 1st, 2019 until today. And I want to share with you and show you the trade by trade summary so that you as an individual can see firsthand specifically what this does so you can get some sort of idea of how the performance works, okay? Now, we use what's called a diversification entry strategy. And that diversification entry strategy just basically means this. We're going, instead of entering into the market with one trade, now let's just say you're used to buying the market with $500 at a time. Instead of investing $500 at a time, you invest $100 at a time up to 5 times. And what that means is instead of placing one trade at $500, you're willing to place 5 trades at $100 each. We're not looking to increase the actual investment, the physical investment. We're looking to diversify the investment. Now, what you're seeing here is an automation aspect. And basically, here's your destination, here's the entry, there's the exit, okay? Now, in this format, and this self-directed auto strategy, it's very much like a calculator. What I mean by that is you will have the ability to pick and choose how much you want to invest with. You have the ability to pick and choose if you want to go after only buys or sells. In this scenario, we're only taking buy trades. You will have the ability to decide how big your stop is going to be. You will have the ability to decide if you want to diversify with multiple positions or only take one position. You have all the control over how this entire thing works. Now, I'm just going to share with you and show you the trade by trade summary, and specifically what it does, but any questions that you have regarding this strategy. So what it's doing is it takes the last 120 minutes, it finds the high price, it finds the low price, okay, and then it takes the close, does a man-discovered equation, forward projects what the market may do, and then from there, what it does is it runs the diversification entry strategy. So here's the entry, and then if the market touches the destination, bingo, there's the exit. This has been done in an automation format. So here's the entry, there's the exit. Now, I have about 7 minutes remaining, and so if you have any questions on how this works, now's the time to ask the questions. Here's the destination. So that's the unfulfilled destination. There's a 9 out of 10 chance the market's going to hit it. Here's the entry. Okay, it automatically bought, and then there's the exit. Now, this can be done in a self-directed auto strategy with NinjaTrader, which is a charting software. We also do provide the indicator on TradingView. TradingView is a internet-based chart, and what's neat about that one is you can receive text messages and emails whenever the destination is actually hit. Bingo, here's the entry, there's the exit. Okay, so here's my question. S&P says, how do you determine the stop level? So we have an entire program where we do a 4-hour class. We have checklists, manuals. We have suggested settings based upon the research. But ultimately, what we do is we allow the results drive the stops and the entries. And what I mean by that, S&P, is it's not going to be like a one-size-fit-all. It's not like a universal glove where it fits every hand. Some strategy or some symbols just have higher average trading ranges, which require larger stops. What this does in front of you is this will allow you to take a look and run historical data through the symbol that you want to trade, and you will be able to see what the stop requirement is. So if you say, hey, I only want to trade with a 50 tick stop, you will be able to see if it's successful or not. If you go, hey, I want to trade with a 100 tick stop or a 200 tick stop, you will be able to see beforehand if that pattern is successful or not, which is a huge insight to many individuals, because sometimes a strategy will work really well on one strategy or one symbol, but it won't work on any other symbol. A lot of it has to do with the average trading ranges, if that makes sense. Okay, so does it work just on one symbol? Nope, it works on multiple symbols. So here is like here's another symbol. This is another futures, and exactly the same thing, but this is only taking sell trades. So you can see here's the short, there's the profit, there's the short, there's the profit, there's a short, there's a profit, only taking sell trades. This one is averaging $3,589.35 a month. That's from January 1st, 2019 until February 27th, 2020. It's over 118 trades, and 99.15% of those trades were successful. But that's only taking the short trades. Do you have to trade full E-minis? Great question. Nope. You can. The CME, Chicago Exchange, came out with a brand new way of trading last year called micro E-mini contracts. Micro E-mini contracts give you the ability to invest 1/10 the investment. This is the micro S&P. This is from this is going to be from May of 2019 until today. And what this shows is a total of 129 trades. 90.70% of those trades were successful, averaging $1,038.71. So here's my question, because we've got to begin to wrap up. But here's my question. Type in a me, M-E, into the question section box if you're saying to yourself, hey, as long as this is affordable, I would like to try this. Type in a me if that's kind of where you're at. You're like, as long as this is affordable, I would like to try this. Active Trader says me, Peter says me, David says me, George says me. Okay, here's what I want you to do right now. I want you to click on the orange button with the arrow in it, and I want you to type your telephone number in the question section box. And here's the reason why. I have about maybe 4 or 5 minutes left. And so I'm going to walk you through everything you get with this program. But literally, I only got 3 or 4 minutes. I have an entire team of education specialists who know the ins and outs of this program, who will be able to answer all of your questions and inform you much more than what I can in the next 4 minutes. If you type your telephone number in the question section box, I can have one of our education specialists contact you as soon as the session ends, okay? So, hey, Active Trader, I got your telephone number. Appreciate the opportunity. David, I got your telephone number. Pierre, I got your telephone number. Caroline, I got your telephone number as well. Manuel, I got your telephone number. We'll have one of our education specialists reach out to you. Peter, I got your telephone number. Now, let me go ahead and just kind of walk you through in the next 2-3 minutes everything that you get with this, okay? Hey, John, I got your telephone number. We'll have one of our education specialists reach out to you. So performance matters. So I wanted to share with you what the performance would have been. And so here's the S&P 500 from February 1st, 2019 until February 1st, 2020 through the NinjaTrader data that we ran our strategy through. Monthly average trading a full E-mini contract from S&P on the S&P 500 only buys $13,678 a month average. On the NASDAQ, $13,325.99 a month average. On the Australian dollar futures, only sells $909.04 average a month. On the Euro futures, $3,140 a month on average. On the micro, only buys on the S&P $1,525 a month average. On the NASDAQ micro, you got $1,487 a month average. So this is what's called Destination Trader, and it's designed to achieve consistent returns. It's user-friendly, simple, out-of-the-box ready, works on TradingView, which is charting software, works on NinjaTrader, which is charting software. You get a 4-hour class available on demand destination trader, calculated indicator, 2 strategies, 4 checklists, how-to videos, online education portal, kickstart of the class, and you get the on-demand of the kickstart. Now the total value is $11,276 US. You get the online education portal, the live class demonstration, the recording of the live class, the destination trader indicator on TradingView. You get the indicator and Ninja Trader. You get a self-directed auto strategy inside of the Ninja Trader. You get the checklist, the manuals, the how-to videos, the Kickstart class, and the recording of the Kickstart class. So the total value is $11,276. Now look, we're all traders in this room. We're investors, or we're trying to learn how to invest. And we kind of know how this works. You invest money, there's risk, and because you invested money and you understand the risk, you do it because there's a potential reward. So if you just pretend for a moment and you just put your investment caps on and you just look at this like a trade, like you pretty much do already, let me just ask you, if all this program really did was help you generate an extra $11,000 a month, month over month over month, for the rest of your life, would it be worth the investment? If all this program really did was give you a life skill that can help you generate the income so you can begin to travel around the world and just simply spend more time with your friends and family, would that be worth the investment? And if all this program really did was just give you the ability to make the money so you can structure your retirement within the next 12 months, would that be worth the investment? Now, we have what's called a launch. And what I mean by that is this month we are releasing this to the public. This has currently only been reserved for our members here at Traders Agency. So this is the first time that we are releasing it to the public. Now, that launch ends this Friday. So tomorrow, that's it. We're ending the launch. So we have what's called a launch savings. When we release this program, it will be $3,594 US. That's the expected pricing when we release it after this launch. What we're doing today in celebration of this launch, we're giving everyone the ability to have a larger savings to take action right away. So we're going to extend the member-only savings so you can enroll for a one-time simple, easy payment of $17.97. You get access for 12 months. But in celebration of the launch, the first 24 people to enroll into the program, we're going to double your membership, okay? And so for $17.97, you get a total of 24 months, which is a massive $5,391 US savings. Now, for those of you that would like to receive the sign-up link, what I want you to do right now in the question section box is I want you to type in link, L-I-N-K, and what I'm going to do is send you the link right now. Hey, Peter, I have you for link. Let me go ahead and send it to you. Caroline, I have you for link as well. Let me go ahead and send it inside your question section box. It is clickable. TJ, I have your telephone number from earlier, and I have you for link. Hey, Dan, here's the link, my friend. I'm sending it to you right now. It is clickable. When you click on the link, it's going to bring you directly to our 100% secured online sign-up form. It's really straightforward and simple. Destination Trader, $17.97, first name, last name, email address, American Express, Discover, MasterCard, Visa. Get started right away. Name on credit card, expiration date, CVV code, and complete your purchase, and you're done. Once you sign up, we'll send you a welcome email with your username and passcode. You get access to your online education. You get access to all your checklists, your manuals, your how-to videos, your Kickstart classes. For those of you who take action today, we're also going to give you 6 live sessions. I'm out of time, and I know I'm out of time, but I wanted to say I appreciate the chance. I appreciate the opportunity. For those of you who are interested, you can type your telephone number in the question section box now. When you do so, we'll go ahead and have one of our education specialists contact you, not an issue. For those of you who click on the link and enroll into the program, the first 24 individuals to sign up, you're going to be able to see, you're going to be able to double your membership. So it is 24 months. Hey, Jameson, I have you for link. No problem. Dan, I got you for link. Dan, I have your telephone number. Active, I got your telephone number. Ahmed, I got your telephone number. KH, the best thing you can do is type your telephone number in. We'll have one of our education specialists reach out to you. Not an issue. I do want to say thank you very much to Anna for the opportunity to be here. We always love the opportunity to be able to speak with your group and share our latest and greatest strategies and our approach and our overall research. For those of you who express interest, go ahead and stay by your phones. We're going to contact you here in a few moments. And on that note, every day, helping people find a way. This is Joshua Martinez, out.
Hey, welcome everybody. Barry Burns here at Top Dog Trading, and really want to thank Investors Expo for inviting me today. So I've got a really great presentation for you. Of course, what else would you expect me to say? But seriously, I do, and we're going to talk about volume, 3 volume patterns that are a little unusual, a little bit contrary to what mostly is taught. We're going to go through 3 levels of them today. So we'll start out with some little beginner stuff. So if you're brand new, you get some of the basics. If you're intermediate, we're going to cover that too. And if you're looking for some advanced volume patterns, I got that for you today too. In fact, some stuff you may not have seen before. In fact, I'll even go so far as to say you probably haven't seen before. But this is what's working in today's markets. You know, markets change over the years. I've been trading for 50 years. Because I grew up with it. My dad was a stock trader, and you know, markets evolve and they change. The technology changes, and so we have to change with it. And a lot of the old stuff doesn't work. Some of it does, some of it doesn't. I've had to evolve with it, and that's what I'm going to share with you today. So let's jump into it. Oh, just wanted to give you, by the way, everything I have for you today is free. I actually kind of dropped the ball here. I don't even have any promotion at the end. I don't have anything for sale, in other words. So all I've got are freebies today. So I kind of dropped the ball on coming with an offer here today. I got nothing to sell you. So today it's just all free goodies. And one of the first ones is my podcast. Of course, this is ongoing, and feel free to check it out. iTunes, Google Podcasts, wherever you like to listen to podcasts. It's doing really well. And a lot of good free education there. I've also got a very famous YouTube channel, Top Dog Trading. Just look at Top Dog Trading in YouTube. You'll find me, and I've got over 200 free videos there. So yeah, I do a lot of you know, just free services, free education to the trading community, and you're welcome to enjoy all of it. We've done, like I say, we've done very well with the podcast. Last time I looked, we were even ahead of Jim Cramer's Mad Money, which I don't know if you've ever heard of Jim Cramer or not, but he's kind of a big deal. And how we got ahead of him, I have no idea. I have no idea. We don't market it. We don't do any advertising or anything. We just got up there. So anyway, I'm grateful. I guess it's because of you guys who listened to it and given us good reviews and so forth. Here's our legal disclaimers. I know you want me to read this, and I won't, but I think it's important that at the beginning of every presentation, since people come in and out of multi-speaker events like this, that we still show it. I do encourage you to read it. If you want more time, feel free to go to topdogtrading.com, click on the legal disclaimer there, and take your time, because don't think of this as just legalese. This is actually education. The regulators have gone out and they have researched why in the world do so many people lose money. So if you think of it that way, then it's a real gift that they've given us, and it really is. So do read it, even if you've read them before. You know, we see it so often, I think we kind of become blind to it, and that's a real shame, because a lot of answers to your trading problems are there. Okay, so bottom line of the bottom line of the bottom line of trading is it's all about supply and demand, and nothing measures supply demand as well as volume does. In general, so here we go with the 101 stuff, the beginner stuff, okay, but it's still a good base. So increasing volume as the market moves up indicates rising demand and low supply. And then conversely, increasing volume as the market goes down indicates rising supply with low demand. All right, pretty basic stuff. Here's a little illustration of it, of course, with the chart. So you see market moving up, price action moving up, volume underneath it moving up as well. So it confirms the price, basically the trend is up and we're seeing it be a strong trend. If you think of it in that way of strength or weakness, because sometimes the market can move up on weakness. It's not moving up on strength, it's moving up on weakness. There's no strong volume to accompany it. But in this case, it is a strong trend. Now, here's the opposite, a little less intuitive, but still pretty clear. Market's moving down, price action's moving down, and volume's moving up. So in this case, we would say the downtrend is moving down on strength. They're going in opposite directions, but I'm sure you can wrap your head around that. Downtrend, increasing volume, strong downtrend. All right, that means we'd want to be trading in that direction. Now, here are one of the 3 volume patterns that I want to share with you today. And this one is a little, now we're getting into a little intermediate stuff. So this one, again, it's not rocket surgery, but it twists your brain a little more, but I think you're going to get it real easily here. Bring on my little highlighter here. So here we get price, this red line, by the way, that's the 50-period simple moving average. So we see price going up, 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 up. But in this case, while price is moving up, volume is moving down. And that's what I referenced earlier. So this would be considered a weak uptrend. You can have price going up and volume going down, and that is a very important thing to note, because it's kind of a leading indication. Now, I'm not going to say indicator because volume is not an indicator. It is what it is. It doesn't point to something else. It doesn't indicate something else is happening. It's just a statistic. That's how many shares, lots, contracts are going through the market. So it's not a mathematical function. It's just a stat. So when price is going up, but on decreasing volume, decreasing interest, decreasing supply, that means this is probably not going to be sustainable. So the one thing we wouldn't be too interested in here would be to buy a trend retrace or a breakout. This is probably when you get a false breakout or a failed retrace. And so ahead of time, while we're watching this go up and up and up, if we're thinking, okay, I might want to take a trend continuation trade after a retrace is here, then you probably might not want to, because again, you're getting this forward little advanced notice that as we're going up, yeah, there's not that much interest. In fact, it's decreasing. Then, all right, as the market comes down, as we get a retrace, then the volume actually increases. So we've got weakness up, strength down. Normally on a retrace and a continuation to the upside, we would want 2 things. Number 1, weak volume coming down, meaning there's not a lot of short selling going on, and a shallow retrace on price action. Where here we get the opposite on both. We get a big move down, not shallow, get a deep retrace, and we get volume going up. So the strength is down, weakness up, strength down. So what do you want to be in the direction of? You want to be in the direction of not just a moving average and not even just price action. You want to be in the direction of the volume, the supply and demand. So in this case, this is again a little bit of a forward indication that, oh, supply demand has shifted. Again, we've made a higher high here. We've still made a higher low if you compare it with that low there. But is that enough to say I should go long? No, not at all. And so now when we get back up to this retrace here, now we have a lower high, we have a higher low, we have basically a triangle pattern is what that is. And I would short right here. Now that's called shorting within a contraction pattern. So let me show you this here. This is how I trade triangles. Most people will trade triangles after the breakout of the lower trend line, or they'll look for a breakout and then what's called a throwback. Problem with a throwback is sometimes you don't get them. So the breakout, great. I trade in what I call inside the triangle. So I trade it before it breaks out. This is based on the principle that professionals are always in early, amateurs are always in late. If you wait for the classic breakout of a triangle, you are in late. You are trading with the retail traders. Most retail traders lose money, as we've talked about. Therefore, you got to get in before them. See, the perception is it's more risky. The reality is it's less risky. And so this is one of the ways people say, well, that's fine, but how do you do that? Because you don't have the breakout yet. And I call this a triangle breakout trade. And I've got some a later version of this same lesson on YouTube. And it's really interesting. The responses that I get in the comments is people say, well, that's not a triangle breakout trade. And I'm like, yeah, it is. It's a triangle breakout trade setup. And they respond, but it hasn't broken out yet. And I get, exactly. If you wait for what's obvious, then you're going to get what everyone else gets, and that is losses. So the trade setup is a breakout trade before the breakout occurs, but that is the setup, meaning that's the intention. That's what we're looking for. And they're waiting for the confirmation. By the time something's confirmed, it's too late. That's like the news of technical analysis. And you've heard the term buy the rumor, sell the news, right? Well, that refers to news events and earnings reports and all that kind of stuff. So once it's known to everybody, it's too late. So you should buy the rumor. Same thing occurs with technical analysis. Before it's obvious, before technical analysis obvious is or pattern is obvious, which would be the news, you should be in on the rumor of the technical analysis pattern. And this is one way to do it. And now we're not going to do this on every triangle. We need some confirmation, and the volume is what's giving it to us. That, yeah, that is a safe short now. And we do have our lower high. We do have our higher low. Another objection I get is, yeah, but you don't know if that's the final high yet. Actually, I do. How would I know? They say, well, it's not confirmed and you're just shorting there. Well, again, that's where you've got to have an edge in the market. And my edge in the market is I have a timing indicator that tells me, yeah, that is going to be the final swing high. And I will actually give you that timing indicator. If you stay till the end, I'll show you how to get it. Absolutely free. And that is a huge advantage. You know, it's interesting, a little sideline here. So many people are focused on price in the market. And of course you should be, you've got to be, no question about it. Very few people have any sort of timing indication on their charts. And that's a huge mistake because we've only got two axes on the chart, time and price. So if you leave out the timing element, if you don't have a good timing tool, well, you are literally leaving out 50% of the information on a two-dimensional chart. So how can you have a probability scenario? You can't. And to make it even worse, W.D. Gann, the famous trader, he said of the two, time is actually more important than price. So this is where so many traders fall short, is they're not using half of the information available to them in an accurate, precise manner. So anyway, we'll solve that problem for you. That's not today's lesson, but I just wanted to throw it in there. And I'm not just leaving it out there because I will give you my timing indicator and I'll show you how to get it here at the end. Okay, so yeah, that's basically that. Let's go on to volume pattern numero dos. Zwei, deux, French, duo, Korean, ni, Japanese. I am pentilingual with the number 2, which is very impressive. Okay, seriously, what do we got here? So this is a counterintuitive low volume pattern that provides reliable entries. People are very, very accustomed to hearing about high volume patterns, volume spikes, increasing volume, decreasing volume, and that is all great. Absolutely, that is one way to use volume. But not too many people show you signals that are triggered by low volume. And that's what I'm going to show you right now. But there are several things you've got to put together. And this is true of all things trading. You have to put together a number of uncorrelated variables. That's what gives you a probability scenario. There's never any one thing that makes you a profitable trader. It's always putting together a number of uncorrelated pieces of evidence, if you will. But when those uncorrelated pieces of evidence align, that's when you have a probability scenario. So here are the pieces of evidence here. So the first thing we've got to have is an extended trend. So it's gone beyond the norm. beyond the normal length of a trend. Then we look for that's step one. Step two, look for your volume spike. Okay, that's where a lot of people will look for a final low and for the trend to reverse. No, don't do that. Well, I mean, you could do whatever you want. I don't do that. But I do look for the pattern. I just don't trade it. Then what I wait for is a retrace or a retest, I should say, of that low after the volume spike. So remember, step one has to be an extended trend because the trend is your friend until the end. At the end, it's what your enemy, and therefore what is your friend? Then your friend is your counter trend. And that's what this is. This is a counter trend trade. So you don't take this unless you have an extended trend. Number two, volume, huge volume spike. Okay, that shows exhaustion. Still don't want to take it. Not interested. Everybody sees that. Everybody in his gerbil is going to be all over that. And everybody in their gerbil loses money trading. So we don't do what they do. So we wait. And what are they going to do? They're going to place their stops down here below this low. We wait for them to get stopped out. So this is kind of a stop running technique. Now, you and I, we can't create a stop run situation. So we just watch as the professionals do it because they got the big money. It takes a lot of money to do stop running. So we can't compete with the institutions. They got too darn much money. They're too darn smart. They got the big computers. They got, all these advantages. So instead of complaining about that, we just say, well, if you can't beat them, join them. So we track them, we follow them, and we watch what they're doing. We watch them do a stop run, and then we participate in it. Instead of being the victim of it and complaining about it, we join them and we just say, all right, do your thing, but I'm not going to be the victim anymore. I'm going to watch what you're doing. And man, when I see that puppy happen, I'm going to join you and ride the game. And so that's it. Low volume retraces. Here's the key. So again, just to be clear, extended trend 1, spike volume 2, retest number 3. Best situation on the retest is if it breaks this low just a little bit. That's your stop run situation. Low volume. We want low volume here. Why? Because that means that the retailers are getting stopped out. That's really what an indication of that is. The retailers are getting stopped out. Okay, that's retail volume. Then we want to come in and we want to join. And we come in and we go long as a counter trend trade. Where would a lot of amateurs come in? They would see a volume spike here and they'd say, oh, cool. Okay, let's buy that. Well, that's okay. And they might trade this breakout here, for example, and actually get in way up here. And we get in way down there. So we bought wholesale, they bought retail. Buy low, sell high. They're buying high and selling higher. Nope, that's one way you can trade, but risk reward is not as good. Risk could be the same if you placed your stop down here, but your reward isn't as good because you already missed out on all that reward. All right, so that is the second counterintuitive volume pattern. All right, let's erase all of those lines. Let's go to a new slide and show you. Oh, this is really the same one. I just wanted to show you a variation of it. So this one is showing intraday. This one I don't like quite as well, but it's still viable. So let me see, I got to change my pen color here because I had black. So let's do, well, we'll do yellow, that's fine. So here, intraday chart can work just as well, the 2-minute chart. We come down, this was an extended trend. Okay, we got some good volume down here. We come back up, we retest. Now, the reason I don't like this one quite as well is that we didn't get the stop run situation. We didn't break below those lows. So we got a higher low. It's on lower volume, much lower volume than that. So you can still do that. I would say that's a second best option. Some people like it because they get enamored with, having a higher low. And again, we get our triangle kind of pattern there. Whoops. And I never did learn to draw a straight line. Okay. Oh my gosh, really messing this up. Okay. So anyway, you kind of get the idea there, hopefully, with all my mess. My artistry has not improved one iota since I was in kindergarten. But if I draw this enough, hopefully you can see triangle pattern, contraction, and we're getting expansion out of contraction. Okay. And so my mouse is going a little crazy. Got a couple little crumbs or something on my mouse pad here, so I apologize for that. All right, but I show this because it's like before I showed you the triangle pattern. So we have a triangle pattern here as well. All right, let's erase that mess and let's move on to the next one. So a couple of variations of the same type of pattern. This is what most people are going to do. Most people are going to wait for, again, the breakout, right? They're going to wait for the breakout. So they're going to wait for volume to come back in here. Yeah, I'll just bring up my little highlighter on this one. So they're going to wait for the volume to increase, wait for the breakout above that high on increasing volume. And, you know, now the problem is, well, okay, if you trade that breakout, you're in here, goes up a little bit as is typical, it's going to come back. I mean, where do you place your stop? Do you place it way down here? Wow, then your risk is huge. Do you place it below where you got in? Well, then you're going to get stopped out. And it's just a real messy structure. Breakout structures are very challenging to manage with a risk perspective. So I never trade breakouts, actually. To me, that's too late to get in. Okay, so now let's look at the third one. The third one is this. This is a really cool one. I like this. This is called a squat bar and is a mismatch between price and volume that leads to explosive market moves. So it's kind of the opposite of the last one. Before we were trading low volume patterns on big moves. This one, we're trading a volume spike, but on a very narrow range bar. And that's the key. You've got to have those two together. So step one actually would be a very narrow range bar. All right. And then number two would be a spike volume. You got to have both of those together. It's the combo that allows you to do that. All right. So that's called a squat bar. So now that's just the micro pattern. Then when we look at the macro pattern, we see, all right, we've gone this 50 MA is the red line here. So we've gone below the 50 MA or below the 15 EMA. That's the black line, by the way. Pinballed here a little bit, got below the 50 MA. Now we're kind of going sideways. So we've got a contraction pattern here. Low volatility. Market's just going sideways, runs into the 15 EMA. When is this thing going to finally break to the downside? The volume spike within a narrow range bar. What that really represents is, you know, we would normally expect if a lot of orders come in, we're going to get a wide range bar, and we don't. So what's happening is you're getting a lot of pressure built up in that bar, and then it's going to just explode one direction or the other. So the big question always comes in, well, how do I know which direction it's going to go in? Great question, of course, very important question as a trader. So first of all, I look for whichever direction it actually goes, right? Because the direction that it goes, that's the one it's going to go. So then it is going to, you know, price is price. But I'm also looking for trend. So we're below the 50 MA. We've hit our relative strength retrace. In other words, a strong move down, a weak retrace, as we were talking about before. Therefore, our speculation is still to the downside. Nothing has changed. And then also I need to look at the next higher time frame. So we don't have time to go into all of that, but I would also use multiple time frames to look for the direction, not of trend. On the higher time frame, I don't look at trend. It's too slow. I look at momentum. So I confirm my trades on the shorter time frame with momentum on the longer time frame. So I'd want bearish momentum here. And if I did not have bearish momentum on the longer time frame, I wouldn't take it short. That's actually a filter that I use to keep me out of otherwise good-looking trade setups. Okay, but that's the third volume pattern. Now, let's look at a couple of bonus patterns, build on what we've talked about here, same concepts. So in this one, we've got price coming down, makes a low, goes back up. Now it makes a low on a volume spike. So this is where a lot of professionals will draw in a support level. So this, I would highly recommend that you do this as well. Support levels, a lot of people ask, well, what are good support levels? Which ones are better than others, etc. This is one of the best ones because this is what professionals look for. Again, supply, demand, it all comes down to this. We see that the market came down, 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 down until here. And at that time, the market said, market participants, meaning they're like, you know what? We're seeing this as cheap now. And so a bunch of people come in and either buy, or if they were short, they're taking profits. Either way, a lot of people taking action there, saying we have found a value level in the market, this market, at about what, 41.75 or so, where, oh boy, we just are not comfortable with this thing going lower. And so this is people's reaction. People mean the marketplace. So when the price comes back to this level, the question is, well, the market participants stopped it from going down there because they thought it's a cheap value now, and so buyers would come in. And will that happen again? Sometimes yes, sometimes no, of course. So what I do is, again, I wait for now we get a volume spike. Again, I love it because it just broke below it a little bit. Notice these bars that pierced that low, all the highs of those bars are above that low. And that's a stop run type of pattern. And so that is a long. This is why I don't trade breakouts. All these false breakouts we get these days, no thank you. Don't like them. Don't want to be a victim of those. I'd rather do the opposite. I'd rather trade the false breakouts. That's where the money is today. And then just another little tip for you, but it's a pretty good one, because volume, when you're just looking at pure volume bars, not a volume indicator, but pure volume stats, it can be a little difficult, can get a little subjective as to what is high volume, what is low volume, and what is average volume, because each bar is going to be a little different than the others, right? So is that red bar there high volume? Is that one low volume, etc.? So one thing that I like to do is I like to add a 20-period simple moving average to the volume histogram. And that's what that black line is right there. It just kind of gives you a nice line in the sand that's smooth, and therefore I consider anything above it to be high volume, anything below it to be low volume, and when the bars are generally touching it, I consider that to be average volume. So nice little line in the sand there to make the relativity of high volume, low volume more readable. All right, now let's get into some of the advanced stuff. So this stuff is really, really awesome. I mean, this is just off the charts crazy. So now what we're going to do is we're not even going to look at indicators. We're not even going to, well, we will consider indicators, we will consider charts, but what this really is here is just looking directly at market orders. So pulling the veil behind the chart, pulling the veil behind indicators, pulling the veil behind even candlestick bars, and looking at actual orders with the naked eye. This is what is. So here's what I do. I bring up a time and sales window. If you're not sure what that is, just contact your charting provider and ask them, hey, do you have a time and sales window that I can use? They probably do. Most charting platforms do. And then I edit it a little bit. So I just go in, and so we've got our timestamps here. That's when the orders go through. Now type, I change this to only look at trades. When it's defaulted, it'll probably show you the bids and the asks and all of that kind of stuff. Okay, I'm not that interested in that. You can use it. A little more sophisticated, a little more challenging, a little more subjective, because orders can be pulled and canceled. So I only want to see which orders were actually placed, because I know people are very serious about their money. So a bid, no commitment. An ask, no commitment. When that order is filled, now they're committed. That's what I'm interested in. actions speak louder than words. An actual trade that's filled where their money has now left their account, that's an action. A bid or an ask, that's just a word saying, yeah, I'll offer it up here, but then they could pull that order at any time. So I changed type to only the trades, actual trades filled. Here's the price it's filled at, and here's the size. Now, this is another one that I change. So, and you can change this to, depends on the market, but this is the MQs, the NASDAQ 100 futures. So I set it to a minimum of 20 contracts. That means in one trade, I'm only seeing the trades where a one given trade has 20 contracts or more. So this is not adding a bunch of trades together. This is each individual trade. Because I figure mostly the retailers, the amateurs, they're going to trade one contract, maybe two, or maybe three, maybe four, but probably not 20. They don't have the trading account size. So the point is to, I don't want to see what the amateurs are doing. I only want to see what the professionals are doing, what the smart money is doing. If you want to make that number higher, you can, but 20 is a pretty good line in the sand. So that's what this is doing. It is letting me see what the people who have the bigger money are doing. Now here, it's kind of 50-50, isn't it? Kind of 50-50. So I'm not making any commitment right here. All right, then, oops, got to take that off before I can change my slide. There we go. Now, some trading platforms have something that's really cool. Not all of them have this, but check yours out and see if it does. And these are called block trades. This would be an indicator called block trades that you can actually plot on your chart. So you'll notice that here's my volume histogram down here with these vertical blue lines. But unlike regular volume, you don't have a volume bar under every price bar. And that's because the way I've got it set up here is I'm only going to plot a bar that has 20 contracts or more within one trade, traded within that bar. And so you see we get some right down here at this low. And so even before it comes up here, see again, now this looks like, oh great, higher high, higher low, higher high, higher low. Amateurs get in here. They actually did okay, but the professionals got in down here and the professionals got in here. They did not wait this long. Buy wholesale, buy retail. All right, and so again, not all trading platforms have this. By the way, if yours doesn't have it native to your trading platform, then you could also go into your discussion boards or forums of your trading platform and see if another user has posted it there. You'll find that people are pretty darn generous, and a lot of people will create little indicators like this or others and just give them away free to the community. So check that out too. Now, here's one of my favorite ways to use this. So I bring up two time and sales windows. And now I edit them again, but I have one where I edit it so that it's only going to show me where people have trades that are one or two contracts. And that's it. In other words, nothing more than two contracts is going to plot on that screen. And the idea there, the concept is I want to watch the retail traders. What are the retail traders doing? What are the amateurs doing? What are their trades? And notice, by the way, 1205.75, same price here, same price there. And then I got another one where it's like, okay, on this one, I'm going to make it where I can see, and it only plots trades that are 10 contracts or more per trade. And that means, again, the people who have more money, the bigger accounts, probably the professional traders. Now, granted, there's some amateur traders that have a lot of money. That's a really dangerous thing, and they'll trade larger size. So it's not 100% either way, but it's a very good indication, right? The vast majority of amateur traders are not trading 10 contracts or more. And I don't know any professional traders who are trading one or two. So good comparison, and that's basically it. What are the amateurs doing? What are the pros doing? Compare, and which side of the market do you want to be on, the smart money or the less smart money? And so this is an X-ray into the distinction between what the professionals and the amateurs are doing. And wow, that is powerful. That is powerful. So that's your little advanced tip for the day. Highly encourage you to, at least play with it, test it out, see if you like it, and use it with whatever else you're already doing. Because supply demand volume is important for any market, what I'm sharing with you today will work with stocks, forex, futures, commodities, or options, and any time frame, day trading, swing trading, investing. I mean, all markets work on the basis of an imbalance of supply demand. So what I've shared with you today is very universal. So just to finish up here, I said I didn't have anything to sell you, and I really don't. So all I've got is freebie stuff for you today. Sorry about that. I know you're really upset that I'm not here to sell you anything, but what I will give you is if you go to topdogtrading.com/free, then I will give you one of my courses for free. And this course is, well, actually, it addresses a lot of what we talked about here today. How professionals trade differently than amateurs, right? That's kind of the unifying theme that we have talked about from a couple of different perspectives. We've talked about it from volume. We've talked about it from price structure. We've talked about it with our looking at the block orders, all kinds of stuff like that. But here we go into even more, how professionals trade different than amateurs. So you can try before you buy, or just try and actually never buy. It's my gift to you. What you're going to get here is even more. I'm going to give you some really practical stuff. Number one, I'm going to give you one of my trade setups. So here I just gave you some concepts, some ideas that you can combine with what you're already doing. This is called the rubber band trade. And this is an entire trade setup, all the rules, all the filters, the structure of it, everything. So I want you to take that, trade it on a demo account or a simulator until you prove to yourself you can trade it consistently. And then if you like it, go ahead and start making some money with the trade. Number two, I'm going to give you, because it's a course, you're going to get 5 20-minute trading videos. At the end of each one of those videos, you're going to have a little interactive quiz to make sure you got it right before you move on to the next one. And then, as I mentioned, I'll give you my cycle indicator for free. That's actually on a separate webinar. That takes an hour to go through. We get it set up on your charts. And by the way, it does work on any charting platform. So whatever charting platform you have, no problem. It works. It's not software dependent. It's not programming language dependent. And I'll get it set up on your chart for you and then show you how to trade it so that you'll be able to use that time access and time your entries with precision. When I mean precision, I mean to the penny, to the pip, to the tick. And I will show you that kind of detail on that presentation. So we'll have one scheduled probably next week for that. We don't have the date and time yet, but all you have to do is go to topdogtrading.com free and you get everything. So we'll be in contact with you. We'll just send you an email with the schedule of the webinar and you get immediate access to the videos in the rubber band trade.